welcome to the Breakfast Club. My name is Darren Hancock, and here we are on Wednesday, the 15th. Let's keep looking at my calendar every once in a while. 15th of May. Man, we're really cruising along here. We really had a PPI, or was it? No, CPI this morning. Well, that was an interesting little run, and wow, impressive. It's an impressive run up. I don't know if anybody else caught that this morning, but usually you stay out of that kind of stuff. Usually, you should always stay out of that. Just wait for it to settle out before you see anything interesting to get into. They're big runs, but they can take you on the wrong side, and that'd be it. You're hammered. So from the perspective of discount to premium, we finally filled that whole premium range again. That discount array to premium array. Took out these old highs. Now we're pulling back into that fair value. I like to see them leave these intact before we make a little another reversal back down in May, if the seasonal tendency is correct in terms of equity clock. Then we should get a reversal back into, not sure which range we're looking at right now. There's between this one and this one. I don't see any reversal pattern happening here yet anyway, so you still have to remain bullish until proven otherwise. You can't just base it on one chart and one seasonal tendency. So we've cleared out the highs. You look for this reversal pattern happening now on the 1 minute. That's a level we'd be looking to take out. And now you've got this big fair value gap here. You would technically have to break through it, come back up anywhere inside that to go short. So we're going to wait for another setup. Return to this fair value gap. It's a fill. We've cleared out this run here. Come back inside. I'd like to see that roll over now and come back down. Make sure we've got everybody that we're on here live this morning. There we go. Who's first through the door this morning? Snow Duke is the first through the door this morning. Snow, welcome, Snow. And Hans, nice to see you. Morning, Tommy and David. Welcome, welcome. Let's see what we can find here. All right, so ES. ES has taken out its recent highs on the daily. Again, you're looking for a reversal. This came all the way back in, filled this fair value gap. We have a reprice rebalance. We have a little small imbalance right here. So we come back inside that. I love that. Back to the order block. Body trades below it. We come back inside it. Continue down. Throw all these little imbalances on the way down. It's coming rain. Well, if we get above here, close, you already have that order block there. See if this order block's mean threshold holds before continuing lower. Dow Jones still hasn't taken its high of its fair value gap out yet, and it's still got fair value to reach for in here on a daily. We're just breaking into this one. Yeah, looking for continuing upside here, and we have this one right here. Your eye goes to this one here. For a continuation to the upside. Lows are taken. Body trades above it. That's a nice opportunity right there to go along. Stop would be here. Keep in mind you're in the premium portion here. We have a discount here. We've ran up to it, came back to it perfectly here to go long. Then we're coming back into that range again. So we're already trading below it. So give it the discount run back into this area. If you lose the ideal one would be right here. Stop loss there. If you trade below it, close it out before it hits your stop. So there's your entrance. You're looking for higher prices. Fair value gap. Stop losses here. If it trades through it on a close and comes back to it, take your trade off and move to the sidelines and wait. So that's the area to kind of keep in mind. So the plan would be, and this is not your plan, this is just an idea. The idea would be the perfect entry is there. If it goes short on you and closes below you, stop losses here, risking whatever you risk there. If it trades below it, if it fails, you have your fail part of your trade plan set up. If it fails and you trade back into it, you get out at break even and move to the side and wait for a better setup. And then you're heading back into that range again. So you're looking for these highs to get taken. And we're looking for higher prices on the daily. So that's your upside objective. Now you wait for a perfect time of the day for this to happen. Be 10 o'clock-ish. For continuation to the upside, go to your hourly chart. See, we're between this premium one and that discount one. You're in the middle. Wait and see game right now. Let's wait. Wait till you see something clean. Don't try to force a trade. So we're expecting this downward pressure on US dollar for a while now. Finally get it. That gives us some good upward thrust for euro. We've been looking for the euro to close in that fair value gap, and it's done that now. That's great. You have this low taken. You have this fair value gap. We've not broken above it. Come back, traded inside it, trading higher. So far looking good for higher prices. Equal highs up here. British pound, looking for, so far, mean threshold. You're looking for this to at least hit rejection block in these old equal highs up here. If we do get a retracement, look for this old high back to the mean threshold or consequent encroachment of that fair value gap below you. If we start digging below the highs, if we just come back to the high, settle in here and continue higher tomorrow, that'd be great. You're looking for those old highs to get taken out and a return back into this order block here. I'm looking for the reversal. So we have a lows taken. Here's your swing on the hourly. Huge squeeze on your stop. Still closes above you though. That will be an interesting psychological study. How did you feel when it was squeezing you? Did you chicken out, took your stop loss before it hit you? Because that was one big bold downward candle. Then it suddenly stopped right at the 50% mark of that wick and then snapped off of it. Didn't trade through it. Snapped off of it, came all the way back up, closed above your fair value gap, and then finally took off. That'll be a heck of a squeeze. So Canadian dollar finally coming down. We finally feel that fair value gap we were looking for. That little reversal yesterday or a couple of days. Yeah, yesterday. We were calling for that on Monday, looking for this to take out the high and then run lower. And it's literally worked perfectly. Come back to fill this. So their 2-day run to here would have been an awesome trade. And that setup there yesterday was right in here. So that would have been the high taken out there. And I think we even found ourselves the reversal there as well. Yesterday, the 15th. I think this was the 7 a.m. Oh yeah, this was that 8:30 open. Same thing we saw this morning. You see this big monster run up. The reversals here. You gotta wait for a candle to drop below it, not just a wick. Finally drop below here. Body pops in, runs back up to the order block, and then finally retraces away. So you get that signature look, the thing you're looking for as soon as it breaks those highs. If that's your area of interest for you, you look for a signature setup and a time of day that you expect price to do its magic, and then look for a continuation. And if that's your downside objective, you've got your 2-day run into your objective. Your trade for the week is complete. Move to the sidelines, go golfing. New Zealand dollar finally broke its highs we've been looking for. These highs to get taken. So far it's doing what we wanted it to do, and now we want to see it run into this fair value gap above us here. Not just tap it, you want to see it. So if it's tapped it, then you look for a counter trend for a quick snipe trade, or you look for an opportunity for it to come back into here on the hourly to catch a run back up into that fair value gap above you. If that's your overall objective, to keep pushing higher, then look for reasons to find trades that take you higher. Finally cleared out these highs. It's good. It's a good week. Japanese yen came all the way back to our order block we were looking for. Dipped in a little higher than I thought. Wanted just to come back to the body. Yesterday it ran a little higher. It opened on the body today. And now we've got to run back into this range. Look for a discount array down here. There's your premium. So this is the daily chart. If tomorrow we get a reversal back up into this, right here, I'd be looking for an opportunity to get short there back into this discount array. If it doesn't suddenly go charging through it. If we just get a stall on that fair value gap fill there, and we come back up, and tomorrow you get what Thursday's reversal back into this level here, and then you start to get that Friday continuation on the downside. That's what I'd like to see ideally there tomorrow. I'll kind of outline that here. So you get an idea of what it is I'm looking at. We're going to stick this one here for now. So you have a premium array, a discount array. We have a small little range we've been in for the last week or so. So if we're running back, if we're running back into this range again, we're looking for the discount area in here. 50%, you hit 50%. That's another place to hold up, which is right in the middle of that. It's right in the middle of the discount. So you want to see if it just pops into here and gives you a fill, continues back up. It's doable. Now you get a downside run. So if the American dollar continues to drop into this fair value gap here, then you can expect to see this to start dropping into this range here, the 50%. This is another oil trade I put on yesterday. It's panning out. I think I caught a little late though, or a little early. I think I caught it in here. Return. I had to endure some drawdown, but my objective is still that downside, those equal lows in that downside. So we're sitting there. Oh no, yeah. I moved that this morning, by the way, in case you're wondering why it didn't come back and take me out. I had that sitting up here last night while I was sleeping, and I woke up this morning and it was heading down. So I've just been kind of following it down, managing it from the back end with the fail safe. So you got this one here. We've taken out these lows. That's the one you're curious about. You don't want to see it trade above that. So right here, if it takes that low out, then you got to watch for, got to be careful here. So if this becomes a fair value gap, you want to look for those potential reversals, right? So I'm just kind of managing this from the back end now. I tell you, oil can be a really good trade if you catch a nice little run. So this is that fail safe. And the rest you guys already know, so. With that, how are you guys today? Tommy, $482 in the CPI print. You were trading in CPI? The heck you doing, Tommy? That was a gamble. You don't trade CPI. You wait. You stay out of that. Wait for that to do its thing. What the heck are you trading CPI for? Was that your plan? Your model was trading CPI? Is that what you wait for the whole time, is to trade CPI? Be careful, buddy. Be careful. Don't celebrate a $482 thing unless it was 100% your trade setup. Otherwise, 482 doesn't mean anything. Do not celebrate a 482. Focus on the trade. And if that's your trade setup and you've got a perfect setup and you entered into it and you got it in a CPI, I consider you got a little lady luck on your side. But if that was your setup, that was your trade, and you took it, good for you. Business investors, NHB Housing Market Index, 10 a.m. Yep. We're going to expect to see another drive higher or a nice pullback into this range. So you got either direction we can go. We're still looking for it to go higher. Still looking for these highs to get taken out above us here. There's a lot of liquidity sitting up here right now. So do we come back into here, find some support? Oh, we did already. See how we've come back right here on that candle? We traded back to the top of the fair value gap. Now you're finding some support. You come back inside it right here. That little guy right there. Come back, find some support at it. Start pushing higher. Come back. You don't want to see it get below here. See that one there now? You're stepping up from here to here. You come back into it here. And you're compressing. See how we're getting smaller until we wait for that big news release and then kaboom. So it's just running. It's kind of marking time now. Figure out what it's going to do. We've got an open in 7 minutes. So let's see what we get in here. There's some liquidity above and below the market here now. Yeah. Good morning, Russell. Victor. Fernando. Good morning, Fernando. Abs. How's it going, buddy? Omar. It's just 5 minutes. Forget about news trade. It is just 5 minutes. Forget about news trade. Yeah, don't enter in. I'm still in that oil one. We'll see. Hope we get some. Oh, it took it out right here. I came back, took that out right there. Okay, well that trades off then. Let's see where I did enter into that. Right here. I saw this, came back into here, and then went to bed. Left the stop loss way up there. Then started pulling it in the morning when I woke up. That's a quick, huge retrace there. I didn't come down here till she was down into here somewhere. Good thing, because I probably would have got taken out in this whipsaw here during London, or Sometimes it's better just to leave your trade and let it run for your objective. So we can get back up into here. I might go short on that again. I'll wait and see what 10 o'clock's like. But we have that break in structure, right? We ran all the way through it, but we did not close. That's the tricky part. It's got to close above that. Just a wick is not enough. And I put the stop loss on there. Stop loss should have been here. And we wait for a body to trade above it. If it doesn't, you're still in the trade. But, you know, you can't argue that trade. It's still a nice one. Got these equal lows down here. I still think they're targeting those today. Let's see where the news gets us. On NQ, the two wide range even bars, green and then red, 411, 412. Would that be an order block or something different? 411, 412. 11. These ones right here. 411 and 412. Would that be an order block? See, when I was in here, I was ignoring all this because we'd worked this whole range. And I gave you an explanation as to why I ignored all these candles when I was looking for this day to trade back up into here. Like when we were here, I was trying to ignore all of this. And I wanted it to trade back up to right here and get short. And I went a little through it. But I thought this candle has not been validated yet. We haven't got below it. This candle, we've already got the high taken out here. And now this candle traded all the way through it again. So through its mean threshold. So that one's gone. This one here has obviously been worked all the way back up the other side. That one's been worked as well. This one here has not been validated on the downside. And that one hasn't been validated on the upside. So the nearest objective is this high here and back that fair value gap again. So I ignored all of these candles and went right back into the fair value gap there. So this is an order block. If you do get if we run above the high of it, which we have now, this becomes valid from the upside. And now this one here, if this is our final up close candle before I run down below these lows, this one becomes the breaker. So as soon as we get above this here with a close, come back down, find some support at it, you continue pushing higher. Because there's your swing and then the run down to take out all these lows. I consider that the breaker because it's the one that breaks structure all down here, breaks there. They're all going up. Last up close candle inside this little run here, slam down. That last up close candle there is your breaker. So again, if you trade on a close above it and come back on a Thursday reversal and touch the top of it, the body, this the top of the fair value gap back here again. Oh, you'd have to pull that to there. See, we're still inside that little range, that fair value gap here. You see that? The inversion that started this whole run down. We've now come to the top of it here. We popped through. Here's New York open. Now we wait for the range, to be set now. look for a bunch of liquidity down here. It's already run the liquidity above it. Let's run all this. Now it's taken all of that from above and below. It's just done a quick pairing of those with these. And pulls back into the middle of that little consolidation here. Cam model people, you can start watching your cam model here. And watch for displacement candle. Oof. I haven't had a coffee yet this morning. Let me see that oil. Dagnabbit. My bad. I managed that wrong. I just put the stop loss right here. Let's see that. Where did I put it? Yeah, all right here. Why did I put it there? That doesn't make sense. It should have been right here. Because we wait for a body to trade through that, right? Or the stop loss to get taken. That took me there. This, I'd still be in this trade had I managed that properly with a fail-safe. My fail-safe idea would have been managing it better had I used that more appropriately. But that's okay. I'm happy with the trade. Looking at all these highs, then you're looking for that sweet reversal. That sweet reversal. And that may be until, won't be until this afternoon. You usually get that Wednesday high of the week. Then they'll reverse into Thursday. So paired up both sides. Clean them out. Then went higher. Look for this objective here. So far this one is working. This one's working. There's a little tiny one in here. You traded below it. Back inside this one here. Pushing higher. Watch this fair value gap here. For bulls, you want to get through that. Order block. Oh, rumbly tumbly. discount inside this range here, this small little range, swing from here to here. You've got this discount to premium. We've come down to discount, worked our ways, finally come up to the premium level. Look at that 50% mark right there. Look how sensitive that area is. The old crazy Ivan here. Bottom of the hour look back. Here's your 30-31. Your look back. If you plan on heading lower, you come up into the premium, drive through here. You got to get through these on the downside, rebalance. I want to see it take this low out here with the body, come back in here, find some support, continue pushing lower if you're coming back lower. Through the midpoint, it's good. We closed through this one. We haven't closed through this one yet, but I want to see another displacement candle down. That's a 38. So 40, 42 now. Mean threshold. Watch where it closes. Looking for just a rebalance of this thing. You're inside this smaller range here, so you got all the way up to here. Premium one, discount one. You see that? They're little small ones. Discount, premium. Just popped up above the premium or the 50% mark. We'll come back for that later. How about now for later? There you go. This is 62% right on the open. Mean threshold, consequent encroachment. No, ideally you want to see it stay open if you want to see it continue pushing forward. Otherwise, we got back inside that range again. It's pretty much sitting inside here. Now, if you blow through that on a close, it's more of an upside possibility than a downside. Mean threshold of that candle. There. Now this one has been validated right there. So you've got back to the mean threshold of that one, which is pretty much the middle of this fair value gap inversion here. So now it's going to bang around inside here. It gets smaller and smaller while it bangs around between this candle and this candle. If we blow through the mean threshold of that candle, see how we've closed above here now? Now I'm looking for more upside. You want to see this give way now. See how the body closed above it? We came back, found support at this one to push higher. Now we've broken above this one, come back, find support at this, and go higher. If we close below that, then you're back into the smaller range again. You're going to bang around in between these two then. Wait and see where it closes. Right on it. Actually, just slightly below it. Then now if we trade below this one, come back into this, then you go shorter. That's why when you're in consolidations, you just trade from one array to the next array. Get your money moved to the side if you're in a consolidated market. But see how it's compressing? You start getting banging around between these two. That one's been validated, so you're still between this one here now and this one here. So watch, see what it does here. It has to break through the mean threshold of this. So obviously going back to the fulfill of that. Now, where are you going to go? Are you going to bust through that one, go higher, or bust through this one, go lower? You can argue both directions, so wait. But this is interesting. So just watch price action now, see how it's acting off of these little premium and discount zones inside that little small tiny range you're in right now. So you say who's the stronger candle? This one here or this one here? Or which inversion fair value gap is stronger, this one or this one? And you wait for the close. Wicks do damage, don't forget. There you go, now you're closed. I expect this to go lower. I just ran out that low. Close below here now. back into the range again. Swept the lows, come back into that little range, bang off that little fair value gap. Now you're going to use that for support to go lower. Or you're going to drive through that and get back into this one again and start working the upside. We're still waiting for the 10 o'clock, right? So establishing a small range. Wait for the news. You've got liquidity above the market here. You've got liquidity here. Fair value gap above you here. And obviously this huge imbalance down here. Or inefficiency. Good morning, Sir Derek. How are you doing, buddy? Thanks for being so reliable. Like the old wet dog hanging by the back door, running around in the yard. Little SMT, EQNs, and dollar strengthening here for a few minutes anyway. Dave retracted his message and then said good morning. Morning, Dave. Morning, Shep. So see how this now becomes some support. Tapped it, ran through it, run back down, take out these lows. This is mitigation. I don't know why I got that song Woolly Bully going through my mind. I don't think I've heard that in a while. Just suddenly it's I just can't get it out of my head. It just keeps saying Woolly Bully, Woolly Bully, Woolly Bully. It's funny, sometimes my mind just goes off in these weird tangents. I have no idea why I don't know if it must have been playing quietly somewhere and I didn't pick up on it. Now my brain is finally catching up. And now I'm listening to the song again in my head, and it's just going in this loop. It's going, watch out, watch out, watch out, Wale Bole. And that's it. It just keeps going around and around like a stuck record. So far, we're finding support here off the mitigation. Just want to know where my oil trade's gone now. Oh, you guys, look at that. That would have been sweet. Sue, we'd be up in we're gonna have those lows taken. That's classic poor management of the stop loss. That's what that was. My failsafe should have been here. That's a journal entry, but you must say it in a positive. It was a nice positive trade. So it was good. But we're looking for these lows now. They're taken. Not looking for these lows. I'm still looking for this down here now. Lovely. See how we've mitigated off of this mitigation block here. Trade through it. We wanted to trade through it. It traded through it. Came back up all the way up inside here. in mitigation, and now we're still waiting for 10 o'clock though. I'm going to practice this now. You get better at it is if you practice at it. So we're going to pretend like right now that's still forming. Wait 18 seconds. It should be, so your stop loss will be sitting right there. Because if it trades through this after a swing, you look for a run up. You pay yourself here. Consequent encroachment of the main run down. That BISI here, you pay yourself at that. We're just gonna practice with this failsafe here. I want to reinforce inside my brain the right thinking, because I don't want to keep going back and beat myself up over that. We're just gonna practice the right way to do it. And reinforce the positive instead of focusing on the negative. So you'd be waiting for another one of these fair value gaps to form. So wherever you were, if you had entered in on that mitigation block, you're pretty much break even right now. If you're pulling your fib tool on the way down off of this one, we'll do 3 different methods for you here. Start with this range here. So 50%, you pay yourself at 50, 62%, move to 50, pay yourself here. And you're getting close to getting a squeeze out here. So 50% of your trade would be off right there at that low. 60% of your trade would be off here if you're doing the 10%. Didn't quite get this one. Almost took you out here. So you're looking for this to continue pushing through. And if you're not getting these nice clean drive downs that you like, a way you could do it is if you've hit the 50% and it's hit this and it comes back close to you or over halfway and then revisits it again, you can take another 50% or another 10% off there. And just keep, every time it revisits it, just keep taking 10% off in case it rips back against you. Then you just keep loading up on your profits. You're at break even with 50% of it, and 50% of it you've taken profit, and another 10% you're taking profit here. I'm trying to think about how you would manage these consolidation pieces. So right now that's gonna super close to taking you out. This is a 55 as well, so it's probably going to make a high here. If it's not 55, 58 or 2 will take you out. 00. It's 55. High. 702. 25. That one's slightly higher than that one. There, you would have been done there. Well, you would have, yeah, you would have been done because you would have pulled your stop to here. So that would have been your profit just in that small little leg right there. Using that one. If you didn't use your 50, you just took 50% off, 60% off, and you're leaving the rest at break even using your fail safe. We'll see if this works here. Well, you're at break even anyway, so if it hits here and trades above it, there's not much difference between here and taking you out. But you can see how that fib tool is a great way to pay yourself real quick inside small ranges, inside consolidations. Great. More interesting? Just slam it down now. Let me go over to oil here again. I want to see what's going on here. There's the reversal. See? Oh no, that one would have been taken. Oh, okay. I got out right there. But I would have got out right there. So the body broke above the high. Then it broke below the low again. So it's going higher, going lower. That right there would have taken me out anyway. If not there, this would have right there. So the body closed below it, and you just took this low out. So if you're looking for a reversal back into this range here, as soon as it takes that low out and that low out, those both have been taken. You look for a reversal right here to go long. Stop losses here. If it closes below you here before your stop loss gets taken, that's your fail. So the whole trade setup literally happens on a, here's my entrance right here. Ideal entrance would be right there. Stop loss here. Fail safe there. If it trades below me, so if it fails, it has to, I'm on the wrong side of it. If it closes below here and continues down, then I'm out. That's my fail safe. And now you've got this one inside this range. You've got this fair value gap closing below it. So you're between here and here. This could be just the reversal, blow through this. So watch here now how we react right here. if we trade through it, then this was just one of those reversal back into the small bit of a range and then a continuation on the downside. So watch, see how this acts here on a close. There's the close. See how you close below it? You come back, get yourself out there. You're on the wrong side of it. We're going down further. See, that's an entrance and an exit at break even. Ideal entry, kind of saves your ass if you're on the wrong side of it. And that's where you found the wrong side. Anyway, let's continue back here. See, that would have taken you out there. So your 50% paying you yourself at those fib tools was an awesome way to unload a mitigation trade. If you were looking for the subjective and didn't get it and it came back and took you out, you go, ah, I didn't get what I wanted. Well, you had the mean threshold to look for. Also, pulling the fib tool on there got you to 50%. So that's, you should automatically be paying yourself there. You managed to get to 62% of that range for trace 2, optimum trade entry for a reversal. So now you got a body above here. You come back, find some support at this, anywhere inside here for continuation to the upside. You've got a discount one here and a premium one, if you're looking at that higher range, would be up in here and here. So again, if you pulled your fib tool on the whole range from high to low here, and you managed to get in right at 50% here, right on a double or a 0-2 candle, now you want to see that starting to climb up, and then the 7 candle puts you back up in a premium range. You can get yourself out. So now if you got in at 50, you hit 62%, move yourself to break even, pay yourself here. If it keeps going, great. You're in a small range now, and you're right just above the premium, so you almost paid premium for it inside that little reversal. So you pay yourself 10% there, move to break even if it comes and takes you out. We could have a reversal here for a run back into this little range here. So we'll watch, see how if that supports price and you continue going higher. If you hit 70, take another 10% off and move yourself up to 62, and now you're in profit. And this is just super sniping. This is all it is. So there you just paid yourself at 70. And now we're in a premium array inside this range, overall range from here to here. So if it comes back to 62, you're out. If it goes to 75, you chase that up to 70, pay yourself a little bit in there. Not that you should be trading inside these ranges. I'm just giving you an idea. If this was a larger range, hourly, whatever, and you're trading that, this is how you do the fib tool. So this kind of gives us an idea of what it would be like if this was a daily range, for example, and you're looking for it to trade back in here, and you're catching the next couple of days for a run up. This is what you're looking for. So not that you'd be trading in the middle of a 1 minute range at this time of day, watching this kind of crap go on. But there's your 10 o'clock. That'd be like a silver bullet at 10:02. We have a news release, so you want to wait. Now you've got the 75, you've moved to 70. And it just took you out right there. So just that small trade, perfect entry. You got yourself a piece off here, here, and here. And finally the rest of you got taken out there. So 06. That's still 18 handles right there. Anyway, you get the idea. If you're doing your fail safe, Your fail-safe will be sitting right down at the bottom of this candle here. That makes the fair value gap. You pay yourself at the rejection blocks. Find some support at this. You want to get on top of that. Start going higher. It's silver bullet time. If this starts getting up here, you have a cam model 1, 2, and a 3 here. Still finding support, climbing up on top of these. Rejection block. Make sure you're paying yourself with these rejection blocks. You're in a consolidation, so pay yourself. You're not getting any massive run. So if you're in a trade, take your long. So now I've gone from, you want to see that stay open now. Not now. You're still sitting down here. So you pay yourself at the highs, especially when you're stuck and you can't move your fail-safe with you, right? Unless you just move it to your order block, but that's not the fail-safe. Silver bullet time. Imbalance right here. If we were closed below here, I'm looking for this order block here to get taken on the downside, come back into it, or here for continuation on the down. We got equal highs sitting up there too. If not, we're looking for this little tiny area here give us some support, keep pushing higher. Or a fair value gap up as well. That should be right there. That should. What are you guys looking for, up or down on this? If you're picking direction right now, overall, you're still going for these higher highs here. You're looking for these highs to get taken out on the daily still. Are you anticipating a reversal above here now? What say you guys? I shorted too soon and got stopped out. Did you get shorted over here off the mitigation? Or did you short when it got back up into here? Because the moment it breaks this on a high, don't forget, we're still running up higher. As soon as it breaks that high, it comes back, finds some support inside this fair value gap here to go higher inside that range. And if that's 50%, then it's all it came down to is just 50, touch it and continue pushing higher. So far, we've got a continuation off this little tiny inversion, a little fair value imbalance here. This little price imbalance between that candle and that candle is a small imbalance. It came back, filled it. We got a reaction off that still in this premium array. See how you're banging around in between these two? One of them's got to let go. You got equal highs above you. You've got discount arrays below you. So that's the discount one inside this small little range we're in right now. And it wouldn't be uncommon for it to come back into this discount array before finally taking out these highs. So don't think it's always a slam dunk and always running through these instantly. If this gives way, then we're looking for a discount below 50 or a dig into here. Watch how this acts on this level right here. We have not had a body above the premium array to go higher. We're stuck right at that consequent encroachment of that. I'm going to turn my Shorted at 10:02. Shorted at 10:02. We're stuck in this little between these two again. What do you got on YM? Watch here. Body trades below it here. Comes back up inside here. Discount array down here. Yeah, I don't know where you're going there either, Derek. You got to get below this candle here. You're through the mean threshold of this already, so if you do get a run back up into these little imbalances here, look for that mean threshold to hold, to continue going down. If you're going higher, this holds mean threshold, holds price here, continue pushing higher into this one here. Inside that small range, off this order block. Back into this guy. Look for these little imbalances to fill. It's not just one imbalance right there. Just return to it right on the money there. I want to see it pop right in there and just give that a full fill. Main threshold of that candle and that one. You're really between here and here right now. And you're right in the middle of it, so equilibrium. Yes. Oh, man. I was short in here and I chickened out. Oh no, it wasn't. It was over here. I got in here, got out here, inside that range. Look at it. Perfect too. Oh well. Swing below. Here's your swing below. Body breaks above it right here. We return back to it. Perfect entry right there. For the first 1, 2, and 3. For number 1, you got a nice 1 entry right there. To a premium array. Discount, premium, you hit it right there. All in that run. You got to see them though. You have them on your charts. Put all 3 indices on your charts, 1 minute, whatever. Look for your setups. Look for the reversals. And like, man, oh man, look at that. Run above. Here's the body. Breaks below it. You come back up inside this imbalance right here. 1 candle takes out 1, 2. Take the second one. Comes back right into it perfectly. Aiming for old lows. There's nothing in here that shows a reversal really. I think it may be right here. You run all the way through it. Take the lows. Wait for the next reversal to set up, which is right there. Get out of that trade right here if you're managing it from the back end. Then you can get in along the end back into that range there. You got to have the kind of wherewithal to kind of catch these though, and just watch them and trade them and have trust in watching them go and then just letting it run. So when you see these reversals, you go, am I in this? Yes. Wait for it to get to your premium array. Yeah, that would have been a nice reverse, reverse, reverse. Now you want to see if this holds price right here, or whether or not we trade through this to the upside, then it supports higher prices. You were thinking CAM model on the, oh, in here you mean? Yeah, if you're doing a CAM model, were you doing a 1 or a 2? You're probably trying to do a 1 there, right? If you do a CAM 2, take from here to here, 50% of that. If you close above 50% of the CAM 2, then you're, oh, your CAM 1, yeah, looking at, when you get a leg that takes out the low, this is the CAM model you're looking for. The entrance onto the 1, the 2, and the 3, not from the below. If you've already got this leg that's taken out a low, you just want to see a CAM model with a bump down below, come back, wick into it, and then continue to take out lows below you. If you're looking for a CAM 1 model from beneath, after having a leg that takes out that low, then you got to look on the opposite side of this to catch it as a 1, a 2, and a 3 to go higher. I think you're attacking it from the opposite side. I guess it all depends on where you draw your CAM lines. Are you taking this small block right here from that high to these lows? Or are you taking that high to that low, everything inside here? Which would have been right there. So then split that in half. And the moment you break that in half, then if you trade above half of that CAM model 2, you're on the wrong side. And you've got your reversal here that shows you that you're going higher anyway. So now we've had a body close above here and a premium array. See that one? So remember, you're wrestling between these two. One of them has to give way to go shorter or lower, or at least back into the range. So if you give this one breaks and you start to come down, you're looking for a run back into the middle of the range. If the premium one breaks to the upside, then you're going higher. That's what you got to look for. And so inside your ranges, look for these strong level fair value gaps that have now become inversions. And those inversions become stronger when you get on top of them or below them. And when they're in a range, if you have a discount one and a premium one, and the premium one holds for a run back into the discount, that's why you'll see me go like array to like array. So you've got like array at 50% in here of that whole range to run all the way back up into a premium array up in here inside that huge range here. The premium is above you here and here. And let's face it, this one would have been the premium as well, but you want to look for premium range. If that breaks that high one to the upside, then you know now we're looking for a run on the higher liquidity. Now you pull your fib tool even higher still into the top of this range here. Now you see how the body's broken that high there. Next candle makes a run on mean threshold, consequent encroachment of this wick. You want to see this provide a level of support now off this candle or these two candles to go higher. If we break below it, then you're looking for a run back into this small range here, and you're looking for 50% or less into discount range. So watch this level right here, inside this, inside this. There's 50. 62% will bring us in here. Keep these two in mind here, from here to here. Just pop below the 50% if it continues to run higher. That's all it needs to do, is just come back to a little discount. We do have this one here, so I don't think they're going to leave that untouched yet. We can get rid of that one for now, and we'll move it up to here. Bottom of the hour. 27. 27's a move candle or a shift candle, like a swing or a shift. After 27's finished, look for the next one to be the shift candle. If this makes the low, look for 28 to shift. I want to see a high taken out before I run lower. That's in the yam there, right? Equal lows. One of them's got to come back in here and tap that. .38's the shift and the low. Okay, what at 28, I should say, not 38. So now you're looking 30, 32. So this may still come down one more time for a 30, 32. Now that would be the crazy Ivan. And then the slam down, or just a slow turn and just come back and take you out. Looking for this fair value gap. You already hit 50% already, so you are back into this little range here, into a discount portion. But there is a little fair value gap down here, so I do like that idea of running for that. Order block. Got a little one above you here. Fill. Get up on top of that now. And then you're looking for this little next price leg. Starts to get cluttered with all these dots and fair value gaps inside here. Remember, you're always looking for, every time you take out a new high, what are we looking for? We're looking for a fair value gap forming on the busy side. So that's still holding. You want to see it come boop, pop down into here. Then that price leg changes. Equal lows. Order blocks validated here, main threshold. You're really between this candle here and this one here right now. There's a wrestling match between those two candles. If you stick with the trend, you're looking for this to let go here. Now you traded above it. See that? Find some support at it. Keep going. I mean, let's see where it closes. Watch where it closes first. You want to trade a close above here. Report at it. Trade below it, you're stuck in these candles, these two candles again. Mean threshold holding. You're above that one there. So you expect this to start going higher now. Just keep bang, 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 off, up and down off of this little fair value gap here. So you want to see it start to really lift out of here. Rejection block. So you always kind of keep this in mind when you're looking at, if this was a daily chart, an hourly chart, and you want to get your bias. If you understand how price is acting right now, you'll have a bias, even if it's for an hour, even if it's for 15 minutes, you'll have a bias, right? And how would that change your trade if you knew, or you had a strong suspicion based on reading price action, where that next hourly candle is going to go? Would that affect your charts? Would that affect your trade? If you knew with a degree of how much you practice down here on the 1 minute charts to see that that's providing a level of support that you know you can say, that's going to aid my trade. So if I'm long and I see this and I say, I just want this now to break above that. If it does, then great. I want to see that level provide support and I'm still in a bullish trade. You can move your stop loss up to here. Because if we lose that on the downside, you say, no, now we're coming back into this range and that mean threshold. If I lose that, then we're looking for a rundown and back into here. Because if you keep watching it over and over and over again, you start to get a better feel of what each candle is going to do. And if this was a daily candle, you're in 3-4 days worth of run here. Like, this is no different on a daily chart than it is on a 1 minute chart. It all acts exactly the same. So if you're anticipating this and you say, if it comes back into that and provides me a level of support, I'm going to go long right there. I have a swing below these lows. I have a reversal pattern. Body breaks above it, comes back inside. If I get long right there on a daily chart, and I'm looking down at a 1 minute chart right here today, as soon as you see it coming into it, you say, now I'm looking for a reversal. And you see that fancy little reversal down here, whatever you go. Now I'm going long. And I'm going long and I'm going to let that sit there. I'm on my daily chart. I'm expecting to see this run up and clear these old highs out, or maybe for that high inside this range, I want to get a back above here. So it comes back, trades it, hits it, and then that whole day it keeps trading higher and you go, great, I'm aiming for that high. The next day starts down, comes back. You're all right with that and you continue pushing higher. This is what the 1 minute practice will give you. If that's a 15-minute chart, 5-minute chart, hourly chart, how would that affect your trade? If you watched and you realized that that was a key area that you want to see it support, and the more you watch it, the more you say, that's what I want to see, and it starts to manifest itself. It says you're watching price action as it's happening, and you're staying on the horse. You're not getting flipped off. You're not going, oh, I don't know why it's going back up there. Well, you're watching it, every candle that forms. That's why you be in these 1 minute charts. And you'll start to see this. Hopefully you see the value of that, because I certainly do. Amadeus Mozart, good morning. Derek, I like the fact that it's closed below the mean threshold of that 1 minute fair value. Yep, you're back in the one over here in the yummy. So let's just look at how we got here. Order block, you want the mean threshold to hold. It doesn't. Okay, so now we've got a swing, an inversion. If we get a body above that, I'm keen on looking at that. So you look at this, it trades into it right there, great. Wicks down, and then you see a body close below it. You go, yeah, chances are I could be running for the mean threshold of this candle or the lows. So I'm going to wait. And I'm going to wait till we break above this one more time. then I'll get long on it again. So it goes, it breaks above you, it comes back, and it trades below you one more time. And you go, oh, it could be running for these lows. It could be running for this again. I'm out. And it runs for the mean threshold. So you say, if it trades above it again, trades above it right here, then it trades back into it right there. Then it finally leaves with precision. It finally leaves. Now let's say that was your perfect entry. And you want to say, I want to get long right there. As soon as it comes back into you, you're long now. If the body trades below it, you're going to be out. So it trades below it, opens, trades back into it, you break even. You get out of the trade. You wait. If it trades above, it trades back into here again. Once it's gone higher, then you get in on it. So it's right here. You enter in on it and it closes below and you're like, damn, I'm wrong again. You wait for this candle open, it comes back up, trades back into you one more time, you're out, you're break even again. You wait. If it trades back up through you, comes back into you, you're right there on the perfect entry, and now you've got it. So each time you went into this, you had an opportunity on the next candle to get out at break even, at break even. Now you finally got your run up. How's that for and that's just literally looking at using the fail safe that we taught back in April, I think it was. But you have to have, and I tell you, that's easy to say in ones and zeros. Now add emotion to that and see that, and you see this thing fail once, twice. On the third time, are you going to take it? What's your meta program? How many times do you need something to fail before you're not convinced it's ever going to run? Or you just say, no, there's a lot of liquidity up here, man. I'm in a discount range. I'm going to try and catch this sucker on a run back up. It refuses to take out the mean threshold of that candle. I'll just keep plugging away at it. Not that you would. I'm just trying to show you the logic as to why that imbalance area there became a level of really wonderful importance right there. The precision based on the fail-safe. Breaking even. Now you got it. It didn't trade below you again this time. She left with you on board. And you go from discount array to premium array. So then you wait to see if it reaches for here. Now this little silver bullet entry at 10:02. If you got in on a silver bullet run for a long off of here, because that's your reversal, and here's your long, you broke that high, body came back, traded into it right there. We had a news release, so we kind of held off. But the logic is still there. So you see how we've now taken out this high. We're getting close to this high. We're equal highs were here. This candle's high is 568. This one is 564. So not quite there yet. This is what you're looking for. As soon as you see a high get taken out, you're looking for these opportunities on this side. These bissies that are forming on this side. Sharp up, down, watch this bissy, look for the breaker that supports that run above that high. Then you go, ooh, this looks delicious. If we get a nice little reversal happening here, and I can key off of this, I'm going short. So now you're anticipating in the next few candles what you want to see based on these things. And if they don't and they continue going higher, you wait for the next one. And you wait for the next one. And so you're kind of anticipating, after you're reading your price action so much, you're starting to anticipate now where you think price, what you want to see on the other side, because you've seen it so many times. You want to see that reversal happening on the other side. Now the thing is, do you trust it? Do you trust your trade setup? Or are you just going to watch it a bunch of times till you go, yep, I see it enough times now, I want to trade it. $67. You're getting close to that high now. The high is 68. The high is 67.25. So we're at 3/4 of a handle short of that high. Watch these things. These bissies are exciting. I'm not in sync yet, but coming around, having to nibble. I'm off to work finally. Hope all of you have an amazing trading day. You too, Tommy. Have a great day, buddy. Stay safe out there. Now it is how we could have known the bias, how we could have known the bias was bullish. Right here. That's where the reversal happens. I go bullish, bearish on a 1-minute chart very often. When you see the reversal, you go bullish right there. And we were calling it when it was happening. This isn't hindsight crap. This is actually hindsight's not crap, by the way. It's not hindsight. We called this when it was happening, right when we were talking about silver bullets. So that's the bias to go long now. And now you've found more reasons to stay long. You haven't found anything that's convinced you that you've gone short yet. So that's the bias. That's how I find a quick 1-minute bias to maintain an overall run on highs. Look for your daily candles, and we're looking for a run on the liquidity above. We have this fair value gap below. We've been calling for this bias for a week since the discount. And yes, I keep harping on it. We're calling for this broke structure. Finally broke to the upside. We got continuation. So we've got a discount array running to a premium array. So we've been biased up for weeks, or for a week or so, 2 weeks. For this premium array, we've hit the premium array multiple times. Now you're looking for a run above the old highs. So we're continuing on a bias bullish until proven otherwise. Now on a 1-minute chart, we could be bearish inside a bullish trend. But you got to be prepared to get out real quick and use your, like we used this morning, that fib tool inside here to pay yourself. Because if you're wrong and it turns back against you, you see the reversal happening. Now you know you're on the wrong side of it. This one you've already taken out at 50% of that range. So the bias changes from bullish, bearish, bullish again. All because we're looking for specific levels that help us recognize the change in direction. When the algorithm decides to change direction on us, it'll do this kind of stuff. Come back, say, hey, look, I'm changing direction. I'm going to give you 1 opportunity, maybe 2 opportunities to get on, and the bus is leaving without you. Could we be looking for a pullback in the NQ and the buy? Could we be looking for a pullback in NASDAQ and the buy? Well, that's what we're looking for, is we're looking for a potential reversal above these highs. Now, if you're super cautious, you're conservative, you'd say, am I looking for a reversal above these old highs? I would take the first reversal that I found above those highs on the 1-minute chart, or you might say 5-minute chart, a 15-minute chart. If I see a 15-minute chart with a reversal That might make me a little more secure that we've actually taken a high out here. Maybe because it's on a daily and I'll stay in this for a longer period of time, like I'm a swing trader and I want to stay in this for a week or so, and I want to trade back to a discount array inside here, then I'm probably going to wait for an hourly candle to break downward structure. I want to see a break in market structure, and I want to see this fair value gap get taken on the downside, trade back into this, and then I want to get short, and now I'm going to be happy with being in that daily run back into a range that I'll be a little more confident that that's a well set reversal. Does that make sense? So we're still looking for something that's showing us a potential reversal. Where are we sitting right now? 45, 47. So we got a 48 candle. Thank you for the explanation. Appreciate it. You're very welcome. And hopefully, as you can see, the more you understand this 1 minute chart, and the more you understand the little subtle nuances about the little ranges that you're in, and we're looking for that wick to touch that piece there. That is like really, we're trying to stay as precise as we can, and we're trying to stay on the horse as long as we can, right? We're not trying to get flipped off. And if you're on the wrong side and it's trading against you and you haven't recognized this and it's still trading against you and your stop loss is sitting way up here, you're missing a golden opportunity to be playing at a 1 minute chart to see where your stop loss is getting squeezed and why your stop loss is getting squeezed. And the more you understand this on a 1 minute chart, the more this 1 minute chart, when it's a daily chart, it'll make so much more sense to you. Okay, we're about to start the next macro. We're hitting the 1050 macro. Ooh. Like, can you imagine if you would have caught that on a daily chart? How many freaking, and that was the first week of May in Forex charts. Or this was the first week of May. We had the run down. It usually runs up and then we run down. Your May, first week of May reversal. And then you've been in this for all through May, June, you expect a reversal and then dip down into July. Like if you recognize these things and you say, man, as soon as this daily chart breaks that high and we come back into it, I'm going to start scaling in my trade for the premium array above me. If that was a stock and you're confident that this same kind of thing happens in stocks, which it does, you look at this in your stocks and you go, I'm looking for this swing to get taken out on the upside. Now I know, looking at the range I'm in, and pick the right range. Don't pick 10 ranges above you. Pick the small range that you're in, and you go, there's a premium array above me. I'm loading in I'm going to scale in my buys. And by the time I reach that stock would have increased by 2%, 5%. And I'm happy with that. I'll move to the sidelines. I don't care if it takes off from there. I am in scalping with stocks. And if you get dividends paid you on a monthly basis and it took 2 months to get there, then you got 2 months worth of dividends plus your premium rate or your principal increase. And what a great way to increase your stocks. Get paid dividends to hold it while it gets up there. And it sounds simple, but practice on a 1 minute chart. Now, obviously you can't trade stocks on a 1 minute chart because they're just like completely bricks and lines. They don't work too well. You have to trade on a daily chart. So practice on a 1 minute chart, execute on a daily or a 4-hour chart in your stocks when you look for these reversal patterns to happen at seasonal tendencies, and you'll get more confidence that you're going to catch a better run up for and if you use Michael's principles for finding the best stocks, the stock picker idea he has for his material. Man, you've got multiple confluences now that support a 20%. I think he mentioned 20 to 25% return on your money just from October into February, right? You catch that, where all the smart money's putting their money into specific stocks. You buy that stock and you buy it on these reversals at specific times. And you got yourself a tiger by the tail in your stock market. Macro begins. I want to see a body gate below here. And you watch, see how you got this reversal here? Now that you've taken that low out, if we get above this, you're going higher. There's nothing over here that says we got a reversal going on the opposite direction, so don't get stuck in a bear trap. If we get a big body come down here and come back, find support at this, then yeah, I'm into this breaker idea. We have a breaker that runs these highs. You trade below it with a full displacement candle, not just a little wick. And we have a big displacement candle. First, a fair value gap in there would be great. Then come back up and tap it. Then I'd say you got a 2022 model there. So watch this here now. Does this provide support? Or does this provide support to go higher? Resistance, I should say. Does this resist you and you go down? Or does this support and go higher? So what's your range? Here to here. That candle and that candle. When this candle closes, by the way. Right now. There. Now it's between that candle and that candle. So now you're saying, I've got to get above here and get through that to go higher. I just bought, Amadeus, I just bought one of those Apex. They had a good deal on, so I thought I'd give it a shot. So I bought an Apex trade or account last night. And I did buy another Top Step account. Wasn't a big fan of Top Step, but they got a deal on, so I took one of those. I don't know how to set them up, so if anybody knows how to help me set these things up, an Apex thing on TradingView, DM me and you can help me set up my account, because I'm trying to go through that ThetaWaveTrader. Use ThetaWaveTrader for Apex Trader, and then so it'll be a funded challenge I'm going to do. Lauriston, now there's a guy that knows how to use the convert ThetaWaveTrader. Lauriston, I need to sit down with you, buddy, and talk about how I can set up my Top Step on ThetaWaveTrader and then my Apex on ThetaWaveTrader. If you've got time, I'd like to see if you can help me out, because you're super quick and savvy with that stuff. He bought the Dow. I wish he would have bought the well, that's not such a bad deal. Not a bad deal if you would have bought the Dow. Yeah, the NASDAQ is definitely giving you the run. ES is giving you a nice little pop up right here. Nice little reversal. That's got a huge run too. Chop slop in here. Chop slop and boogie. This one is a little cleaner. Yeah, I got nothing in there. Oh, excellent. Thank you, sir. We can meet up on Skype there if you want. If you got some time this afternoon, we can meet up and you can help me set that up. That'd be awesome. I'm getting sick and tired of using MT5. There's just so much manipulation going on in there, so much wicks, so many wicks. This is so much cleaner when you get into these trading view. Amadeus knows how too. They said it would take 4 hours. I went straight to TradeAvate to try and sign in, and they said they didn't recognize anything. So then I went back and looked for their thing, and it said something like you have to wait 4 hours for it to set up. That was last night. So hopefully today it's working. Amadeus, are you in our Telegram channel? If you're in our Telegram channel, I'll have a little sidebar in there if you've got time. Or Lauriston, if you're ready. We could Skype though. Okay, perfect. You see how it's just kind of it's not even bouncing off of an array. It's just stuck inside a candle. This one here, you've traded below it. This one here, you have not traded above it yet. This one here, so you're literally inside these two candles. That one's lower. This one was higher. You validated above. This one you validated below, and you're like just stuck in there. Two overlapping candles, and you're just going. The algorithm's got to bust out of here right now. It's just going to go sideways, and then it's going to go somewhere. So 00. We got something happen on 00. The next 2 minutes, we should see some action. Then go down and click on eval charts. Whether your account is set up. Oh, I go to there we go. We got the next 2 minutes. There we go. Go what? There we go. Sign in, click on the menu. And top left, and then go down and click on eval charts. Eval charts. TradeAvate. Active. Okay, it says it's active. I guess it's active, so now I can go in there, I guess. Okay, now we've taken out that high. Mm-hmm. 568 was the high for April 4th. Yes, it was. This one here. 68 even. Yep. So now we've taken out that high. So you want to see this go bang through here, just big bold candle. And I would like to see it just come scooting down, displace, pop back up inside here or here, and start running. Then you can start looking for a reversal. I don't want to see waffling in here. Just come on, give me some a decent reversal. Oh, good. Looks like I got lots of people. Loris didn't really knows his stuff. I got Fernando and Amadeus. Is Amadeus you in our Telegram channel? If you are, pop in there as well. We have a nice little chat after hours, talk about Bitcoin trades and that kind of stuff here. Speaking of Bitcoin, what's it up to? Swing right here. See how this is almost what we're looking for on our charts right now. Right here. See, you've got one candle that separates it though. We want to see this big bold move down like Bitcoin. This is what we're looking for. Bold move down. You want to see a body trade below it, which is here. Then you want to see it trade back up inside this or this. Trades back up inside it. And then you go short. You're aiming for the first low. These equal lows, mean threshold, first fair value gaps, pull your fib tool, trade your fib tool all the way back down if you want. And then when you get a reversal, which is right here, you close your trade. So this one here, we close the trade right there at that reversal. Body trades above it. You trade back into it. Now you can go long. You're pulling your fib tool in here and you're looking to get to 50%, start paying yourself there. So let's see if this would have actually, we're 11 o'clock too. So we've got a retracement back into 50 to 60, 72% of that range, or 62% of that range. Say, I want to look for something right here first. There's 50%. See, even here, you would have traded to 50%, paid yourself there, but it came back all the way through you and taken you out at break even. That's why you trade those internal range liquidity. Just get 50, it trades through you and you go, okay, now I broke even. You wait. If it trades through it again, right here, if it trades back into it, now you can get a long again right there. Trades into it, you get long. You pull your fib tool, you start taking out 50%, 62%, move to 50. It goes to 70, move to 62. It takes you out right there. Just inside that quick little range there. And you had two different attempts off that same inversion to get long. So anyway, watch it, go back in your charts, review it over and over and over again. You'll see it happening all the time. You'll see it happening. So you have, even if you looked at this one and you said, well, that one looks great. Even if you said, no, I want to wait for this one. Body breaks below it. Here, you come back up inside it. Boom. You're in that long trade here. So you get multiple opportunities to catch a reversal there. And then another one here, another one here, another one here. Anyway, that's what we're looking for. Not getting it. See how the body's not closing below it? Going higher. Looking for these highs up here now. There's a lot of liquidity sitting up here. So until you get your reversal, you're staying bullish. So if you're managing this silver bullet entry from way down here this morning, that silver bullet entry, if you're still managing that on the back end, you still haven't had anything break downward structure or change in direction. So you still got support going higher. So now your fib tool or your stop loss would be sitting right below this candle here. So if it trades below here, comes back up on a close, then we look at that as our potential reversal, and that long trade is closed out here. And you're aiming for these obviously higher. Every time it breaks another high, you pay yourself. SMT failed. Yeah, I don't understand that. I don't use that SMT at all. Reversal right here. Body trades below it. You trade back into it, looking at this range here. Stop losses here. Not that you're actually taking this trade right now. I want to see this actually break this structure to the downside and take this candle out here. The fact that that's trading all the way through that mean threshold again now. I'd rather have seen that just tap this and go, not revisit this. So when you start to see it revisiting here, don't like that. So let's say that you were on the wrong side of that. Not that you took this trade, because you shouldn't. Your stop losses here. Now, as soon as it came back down into here, close out your trade. Stop losses ought to get taken. Closed above it. See? That's why you have a stop loss sitting here, and your fail safe is meant to, as soon as that closes, if it closes above there, you go, now I'm on the wrong side of this. If you get this candle opportunity to come back here before it takes your stop, then ideally you can break even. But in this case, had you taken a trade right there, your stop would have been taken. So you want to see, when you see 1, 2, and it's in a premium array, you want the discount one to get taken with your order block. If we get the discount one taken, come back inside the order block, the breaker that sets up the run. That's the one you want, because you have a break-in structure on a swing, break-in structure, trade back to a breaker, inside of an inversion, in a discount, multiple confluences to support that. This one up here is more of a gamble if you want to catch that one. If it's wrong, as soon as you see that run, as soon as that one starts running back up like that, you go, oh, if it runs through that mean threshold, you go, nah, I'm going to get my butt taken. You don't even want to see that. You want to see that tap that and go. You do not want to see it revisiting here. Did anybody see that new Kingdom of the Planet of the Apes? What did you think of it? Give me your number out of 10 if you've seen it. Dixie is super bearish. Look at that. Look at that 1 minute reversal this morning at 10 o'clock. 10 takes out the highs that it's looking for. We see a displacement. Boom. Body trades below it right here. You trade back up inside it. Look at that. Right inside that little imbalance there too. That's the wiggle room you give it. And look at that run all the way down this morning. That's beautiful. Now you look for that corresponding over here in euro. There's the 954. There's your reversal. As soon as that body breaks that high, you get excited about it. It comes back into your perfect entry here to go long. You catch that long, and you're on a midnight train to Georgia. I'm leaving on a midnight train to Georgia. So wait for that optimum time during the day for this kind of thing to happen. You look for the BISI side for reversal on from long to short, and from short to long, you're looking for the SIBI side. At optimum entry during a day where you're expecting a bullishness or bearishness, these are just like hands down free candy. And if you're not sure, you wait for the next one. Body trades above that one right there. You trade into it. Off you go again. Now I'm convinced it's probably going to go long. But now you're going to be like, oh, it's probably in the premium. I probably missed it now. It's long gone. Silver bullet entry, 1004. There's 58. There's that silver bullet at 1004. 1006. You come back into it. So you have silver bullets as well as this, as well as this. That's an awesomely fun day to catch a nice run. I don't have my account signed up. Oh, I need to get my accounts going. I still don't have that other one. I'm touching that one. I'm just looking to see now how that would have set up on my Wow. Yeah, you would have seen it here too. Wasn't even looking at that chart. That's yesterday. Yeah, nope. Hate MT5. MT5 looks like a cheese grater compared to this. What's your Bitcoin up to? Still going higher? What's gold up to? Your gold right here. Wait for a body to break above it right here. You trade back to it right there. You're long right there with precision at 10.05. It's not even a silver bullet. It's just a perfect. Look at this for gold this morning. At the right time of the day, you're expecting a swing to happen. The Judas swing into the morning. The reversal. You wait for this. It comes up, gets you close. You think, oh, maybe I'm not in it yet. Then all of a sudden it pops back up. Then it goes here. You go, great. Now it's closed above it. The next candle that runs back into this, I'm taking it long right there. Boom. And off to the races you go, catching a gold run. You're on a gold run. It happens, folks, all the time. That's gold. How's my oil doing? Ooh, gold oil reversal. Took the low out, looking for the reversal. There's your reversal. Body trades above it. You don't get the body, so you wait for the candle that initiates the run. And you don't even get that. I don't feel so bad about closing my trade out here. Oh no, look at this one here. This is that rinse and repeat we were talking about before. Watch this. So just watch this on your charts and just go back over and monitor your chart. So we're going to take this like it fails, it passes, it fails, it passes. Let's just treat it as exactly how I've been trying to show you guys. So as it fails, it fails. If it doesn't, it doesn't. Okay. So here's where you say it trades through it. If it trades back into it, I'm going to go long. So it goes, nope, I traded through you. And you go, oh, it closed below me. If it trades back into me, I get out at a break even. Okay. So you break even right there. Then it trades all the way down because your stop loss was sitting right here. If you didn't, your stop loss would have got taken right there. So that's your break even. That's saved. That's why the fail safe works. It saves you a larger percent of the time than it doesn't. So trade below it. I'm on the wrong side of it. It's heading south. Head south. Hits the equal lows. Creates a new reversal. If you key off of this one and you wait for a body to trade above it, it doesn't come back to it. But let's go back to our original one that we were trying to get in on. If it trades above it again, you say, now I'm going to get long on that again, like we did on that other one back in, I don't know if it was Bitcoin or one of those other ones. We just kept looking for a revisit of it, right? It revisits it for a perfect entry. If we're wrong and it trades below us, we'll get back out, hopefully, before our stop loss gets taken to go short or sorry, to go, we're on the wrong side of it. So you're back in on that one again. Perfect entry. And away you go. So practice it. Just look at, you don't have to trade these things. Just mark it up on your chart and look at it and tell me that doesn't happen more often than not. And then look, if it doesn't, think about the failsafe I just showed you. And if you don't know what the failsafe is, go to the channel here and you'll see the failsafe in the video description. I spent a Sunday talking about entirely all morning or all afternoon talking about failsafe and how to implement it, what scenarios you can use it in, how you can modify it, how you can turn it into a trailing stop loss, all that kind of stuff. Anticipating Tuesday's 9 April lows on Dixie to get hit. Larson Smith 100% agree. Looking at the 9th. Oh yeah. I'm looking for at least this 10th candle here, the fair value gap to get filled at least to return back into this order block. Don't forget, we could just hit this breaker here and then stop. I'd like to see it come back, fill that first, and then eat through this mean threshold of this candle and then aim for these equal lows here. But there's 1, 2, 3 PD arrays yet to hit that you can get a reaction off of. And it may just come right down to that, hit it, pop off, and come back into that range again. And again, those are the things you look for. There, which is the mean threshold of that candle. Then you look for the rejection block. Then the 50% of the wick, and then the lows. So there's like multiple PD arrays in there that you look for to see if there's a swing point happening. And if we take these equal lows out, you really look for a swing to happen for a reverse back up. And then you take these euros and GBPs and you look for the reversal back the other way. Again, wait for it, a perfect time of day for that to happen. You're looking for this kind of morning, PM, afternoon session. Derek's afternoon close session. Look for these kind of opportunities to round off the day to come back into the range on the wick for the day. Otherwise, this is a really, really nice, easy sled run down from something like this. So yeah, I totally agree with you, Lauriston. I'm looking at these 3 areas first before that, but yeah. Ideally, that's a great place to aim for. We had a laugh yesterday, Lauriston. You would have remember that day that we were watching your candle go up and down and we're having a good laugh. It was, it's there and it's not there. It's there. It's not there. It's almost going to get it. Then it goes away, comes back. Derek's was the same way yesterday. We're trying to wait. We're putting carrots down here and everything, trying to get that thing, getting it down there. It's hilarious. Waiting for him to finally get his close below an old low. It was just not giving it to him. And then finally slammed down super close, then popped back up again. It was super teasing Derek yesterday. He's probably got a little bald patch on his head, pulling his hair out. Taking forever to set up accounts. Yeah, I would imagine Apex would be just inundated with a 90%, that 90% deal. You pay 90% or you take 90% off You get an entry, you get your, like I got a $100,000 account for 20 bucks or something like that. And it's 40 bucks a month to maintain it. So I did like Erica's explanation about it this morning. It's like, oh, you've got bigger options to play in terms of your you got more spread, more capability to play with micros, and that give yourself some wiggle room. But I also agree with Dave's idea about start off super slow, start off with really small micros and work your way up. Train your brain to look for focusing on the setups, not so much the money that you can play with. What model do I trade? My favorite one is this reversal model. I like to look for this Vision, and I look for optimum time of day for this kind of thing to happen. The thing now is, once you see this, the next level I got to get to is once you see that on your 1 minute chart in an optimum time of day that supports a higher time frame bias to go short, is you enter in on that time and leave it alone. Let it run. And you'll see these crazy whip backs from 11 o'clock. You'll see that 50 to 62% reversal sometimes back into the range that's created between 9:30 and 11 o'clock. And you'll see that big return. That usually shakes me off. And I think, well, maybe I can catch that reversal, counter trend it, and then catch it and run back again. And then you end up mucking around with your trade and just say, just leave it alone. Aim for your higher time frame objective. Exits. These euros must be just climbing. Look at that. What a beautiful day. You wait for these kind of days. That's a solid day right there, boy. That's a beautiful day. Look at that. Canadian dollar's finally getting some money back, which isn't so great. I got some American stocks, so now my American stock prices are going to get weaker. How is UNG doing, by the way? Good. Natural gas. I'm looking at natural gas. I want that sucker to get all the way back up into here. So even if you're looking at commodities, futures, you can find these setups. There's a reversal, body trades below it right here, and the order block trades back up into the order block, and that perfect entry right there. You short corn or soybeans at that point there, and you're aiming for the discount array down in here, or even this guy right here. Just aiming from there to this guy here. I don't know what that pays you in terms of contracts in soybeans, but you're staying in that for a couple of days, 3, 4 days, 5 days, whatever it took to get there, looking inside that range, then you're killing it. CAM model entries. Go to a stock like banks. This Canadian bank right here. Reversal. This is an order block right there. I'm not sure if that's a up close candle. Body breaks above it. You come back to the up close candle that initiates this reversal. You go long. Reversal right here. If you bought the if you sold that bank, Royal Bank, on a seasonal tendency, look at whatever the seasonal tendency is, look for that in your charts. You're aiming for a discount array right here. So you're going from here to here. I don't know if that's worth $36 down to $29. So it's a $6 drop. So maybe a 4% you make over a couple of days. That's more than the bank will give you for a whole year in a savings account. Right? So look for those reversals. Look at a seasonal tendency that supports that now. Here, body breaks below that swing. Right there. You trade back into it. You get short on it now. And you're aiming for, what objectives are you aiming for over here? You see a reversal. That's the October low. If you see it in October, if you're looking at seasonal tendencies for a low to occur in the fall months, and you see this setup going on, the moment it breaks that high, start buying in now. Even if it doesn't come back there, buy it in. If it comes back in, all the better. And you would have, from 114, 142, that's 30% return. 20 some odd percent return on your money since October, plus all the dividends that bank pays in that time. It's crazy. It's crazy how often. Here's another reversal here. Nice, clean, sharp one. See that? It just rips through it, comes back all the way back up inside it, and then hammers all the way down into the discount array. You get another reversal here. Body trades back into it. Right there. Oh, sorry, right in here. That's where you want to be on that one. If it trades below you, go, I wait till it comes back up. There's your high. Dips into it, and now you've got this full run from 26 bucks to 27. That's already almost, that's almost 10%. A couple of percent, 3-4% already in a week or so. Pick a stock. If you're interested in any stocks, find a stock. Do the same thing with the stocks. Still going higher. Stick with it. Oh, what's this? Look at Mr. Dow. We have a body breakdown below. We have a bold candle that closes below. This candle comes up, taps it, short there. So now I'm short on Dow. One like? Is that what we got this morning? Just one like? Hello, Michael. Yeah, we've just been talking about the this beautiful silver bullet that happened over here this morning. We got this nice little reversal right around the 10 o'clock time. You got this reversal. Body breaks the top of the reversal here, the 10:02. There's your silver bullet right here. And catching a midnight train to Georgia, my friend. And now the Dow Jones looks like it's doing a little, giving us a little reversal action up here. We have a break in we have a break right below this low right here. There's the order block that initiates the run. We trade below it, trade back into it, you're short. And now look at the range that we're inside here from low to high. If you're doing the 50% fib rule that I was showing you guys before, 50%, if you're in here on a short and you're paying yourself inside this small range here, 50%, move your stop loss to break even, take 50% of your trade off. You hit there, take 10% off, move yourself to 50. If it comes back against you, you closed out 50%, you made yourself some money here, and you paid yourself here. If we get to 70%, I know it's not your way of doing it, Michael, but it's a quick way of trading that range and paying yourself on the way down. For those who like skittish, that like to get paid real quick. So 62% brings you to, so always think that this is a potential optimum trade entry zone that you're entering into now. We have a discount array down here, old high, consequent encroachment of your BISI. So now you'd be out. See how that? We would have pulled 50%. As soon as you hit 62, you pay yourself at 62%. Hit 50, you're out. So you've collected from that little run reversal there, off of here, all the way to the 62%. And if it trades back all the way into here or continues higher, you just paid yourself on a small little reversal here. That's why I like that fib tool for that. ICT is here. ICT's in the house. Love you, ICT. Man, there's a little love when you bring some love, man. You've got a whole entourage of love behind you, my friend. Just stopped by while my wife changes. Well, thanks for stopping in. We appreciate that. Shopping with Auntie today. Was able to ride a 10 o'clock silver bullet. Jeremy, ICT's with us. Hoping for the reversal. YM has room for nice entry there. Now all of a sudden the communications just lights up when you're in the room, my friend. This is great. So now we've got this reversal. I like this idea. We've got a reversal here and here. So look for, now that we've got this body breaking here, look for here and here. I want to see this provide a level of support now. I want to see us push up higher into this range here. And we've got this small little guy down here as well. You've got this side forming. So I want to see that provide a level of support. We can come all the way back into here. I want to see this stay open though and start pushing higher. We do have this order block here and this breaker. This last down, well, I guess this would be it. You have to take the beefier one. So return to this. If we end up getting here and we react off of that, because we're looking at 50% of the range here, I bet already. Yeah. This is where you get stuck in the middle, right? So this one supports or run back up into a premium portion of this range here. We got the breaker here that runs up. See if we get a reaction off of here to continue going lower, or here, get above that 50%. You have a small imbalance right here, fair value gap above us here, into the premium range. Just pop up into that 50% of that small range we created right here. Back into the breaker, the mean threshold. Now, cool, it would be nice to see this just slam right through here. Pop through this on the downside, continue down. If we continue to hold this on the upside, look for a higher premium array in here. And that's our reversal. So you got like one of two different directions we can go to here off this 50% now. Consequent encroachment. Just watch, see how it acts every candle, see where every candle starts to play, what kind of sensitivity we're going to get off of each one of these levels. Watch here. That's all it takes sometimes, just to pop just above the 50% inside the breaker, find some support, continue driving lower. We want to see this area here either hold support to go higher or give way, and then you want to see this one give way to go down, run down the lows and look for liquidity further down. Good, now we got down. So here's your, it's giving you the indication, guess what? I'm going down. We're going to get through this guy here now. Need threshold of this candle, get through the close on this one, and then we've got further downside. If this holds, we want to see it get again and back above here to go higher. So these little inversions are the things that are going to hold or give way. So see how it lands perfectly on the bottom half of it. Go back to the consequent encroachment. Get back up on top of here, start pushing up higher into the range. And this is where I take my little fibby and I go in between these smaller ranges and I go, what's sitting inside here? If we end up going sideways here, what is it bouncing off of inside these smaller little ranges? So you're looking at 50% is this portion here and discount is this portion here. So I want to see that get on top of here, start pushing higher and busting outside of that little range that we got there, or this little guy here, because there's all we have is down candles here, and you work back up to that higher range. Watch where this one closes now. So for your reversal, support off of here, pushing higher. Again, if you're in a small little payment thing, if you did get in there, you're paying yourself at rejection block, remember? Or you're 50%, you hit 50%, move to break even, whatever method, or you're using your fail safe to kind of follow you up. Closed above, it's a good start, good sign. Now if it closes below, you're back into this little consolidation again now, so you're just going to be marking time. We need this to hold price. If we drop below here and come back into it, then you're looking for further downside. So you're looking for these levels to provide some support. There's a little imbalance. See that little imbalance right there? You're above. See where this closes now. We're just trying to stay on the horse. If you're here, Michael, we're just trying to stay on the horse. watching price action and trying to stay on the direction that it's running. So watch the next 4 seconds. You're short again below here. See how you're kind of banging around inside this little range here? That candle, this candle. How this gives way here. Watch to see how that closes. Two, what? Now you're short. So off of here, aiming for this low. So now if you were long on that, here's your opportunity to get yourself out. If you haven't paid yourself at the rejection blocks, here's your opportunity to break even, move to the sidelines. Not that you're trading that, but based on what we've been reviewing for going long, going short, inside a range, 50%. That's a perfect little dip example of pop over into the breaker. Now we've closed below this candle, this fair value gap here. We've come back up, find support. We want to see it hammer through here now and dig further into this range here. If not, we're coming back up into here again. We're going to be, it's one of those ones where you climb up on top of it, get back into this one, and you're really stuck between those two again. And we're into the macro now. So we want to see this continue to extend down. If we're coming back inside this consolidation here, we have a fair value gap above us. We have a reversal here. Trade back into here. So we're still bearish. I'm still bearish here. So you go bullish. For me, you go bullish if we start breaking above this candle's high on a close. Sorry, this fair value gap's high on a close. Then I go higher. But all the time we're staying below this one, I'm going short. I'm reading it short. I should say, not going short. I'm not taking a trade here. I think Michael comes in the room, everything kind of settles down, hey? Stepping in with wife changes. Well, you could be here for a while then. If you're like my wife, you'll be here for a while, Michael. My bearish entry. Equal highs. On ES and relative equal lows. Jesse, second phase entry. Up that tiny city on the 30 seconds. Do we need to close below 33910? 33910. For an entry, you're looking for an entry, Russell? I want to see that get taken to the downside. There's not a really decent reversal happening here anyway. Maybe off of You could trade all the way back up inside here. Stop loss would have to be here. If you break that, like I say, if you break this high on a close, like the ideal one would be right there. So if it breaks that high and trades back to it, you're wrong. It's going to continue going higher. If you're right, you've caught an optimum entry there for a continuation on the downside. Right now, this is consolidating. I wouldn't touch it. But all the time we're still down here, I'm still bearish. All the time the bodies are still staying below this fair value gap. We've eaten through this order block, the mean threshold. So if we run back into this consolidation again, then you're just waiting side to side. You don't want to be, you want a clean entry, you guys. You don't want to be messing around with sitting inside consolidations. We're just trying to measure price, watch price, trading in small little ranges. What's it going to be reaching for inside of here? So if we get above this again, you're looking for inside that range, you're looking for that fair value gap above you. So we'll wait for see where this closes. If it closes above again, we're reaching for that fair value gap above us. Mean threshold, order block, keep your eye on this guy here. And if we close above it, look for this to give way and then continue up, looking for a longer or higher range. And we have this fair value gap up here and a little pool of liquidity sitting just above us here. There's a fair value gap in here. In terms of the premium range, if we take that on a close, look for this and this. And usually you want to see a reversal take out an old high. You don't want to just see this. This does not take out that high. There's a little guy right in here too. That one and that one. This is still supporting shorter. This one supports higher. So still bearish off of here. You've come from a discount to a premium inside this small little tiny consolidation here. From there to there, you've come back into the premium range. Pull your fib, you'll see. Take every little swing point that you see and just kind of look at them above 50%. And like we saw here in this range, it just pop above 50 is all it needs. Pop above 50, continue on the downside. We're back below this guy again with a close. And this is acceptable for it to run back up into a premium to go a continuation on the downside. I'll get rid of that line there. That was our imaginary stop loss. Long. So if you were going here and you were going low off this and that was your entry and you pay yourself at the rejection, but always pay yourself at these, you know, hear me mention that a million times, pay yourself at rejection blocks. If you're inside a small little range, and again, you have to decide whether you're going to trade something small and tiny and or you want something more meaningful and meaty. If it reverts, our stop losses here, if it trades below us, then we know we're on the wrong side of it. Trades back to it, gives you an opportunity to get out, break even, and wait. Now you've got this consolidation, trade back into the midpoint. All the way back down. Now you've got liquidity all down on the downside, and you've got buy side liquidity above you. It's just above 50%. They're not going to leave that untouched. You still have more premium array inside this little piece right here. Now again, if we climb above here, then you're bullish outside of this array. And if you go below it, then you're back inside the consolidation again. So this is just going to tell us where the algorithm is just reaching in terms of I'm going in this direction, I'm going that direction. Going in this direction to a premium inside this little range. See how we're kind of stuck between these two? Pop below, we got this guy right here. Keep coming, keep coming. Let's run some of this liquidity out below us here. So it just keeps reaching up into a premium, continue back down. Lovely. Lovely, lovely. We did not close above that high. We just kept reaching up into a premium. It can keep going lower, reach up. Now you want to see it come back into here, provide a level of support in here. I'm going to see if I can get this guy right here. Lows. Those lows provide us a level of support. If you pop through them, look for this. I don't want to see that close above here now. I want to see this continue to run down lower. If we close above that, look for the mean threshold of this candle and see if we close above this. If we blow through the mean threshold of that candle on a close, and we're above this one, then we're going back to a higher range again. Otherwise, I want to see that hold and the continuation on the downside. Yes, I agree. That makes sense. Can you look for at NAS, please? I certainly can. Let me see your NASDAQ. Here's a reversal. Body comes back up inside fair value gap. Support. Body supporting in here. Continuation on the downside. Take these lows. Look for an order block return to here. Continuation on the downside. I want to see this continue down now. We've closed below here. We've closed below. That's our reversal right there. We've taken out the highs. So far, this is a continuation. Look for, that one's already been filled. pull the range you're in, do your 50%, 62%, whatever you're managing, whatever way you want to manage it. You guys manage your own way down, but you have a wick market structure break with a big body, breaking below here. I do not want to see this high get taken out here. You can get a wick, do some damage, but you don't want to see this high get taken out of that fair value gap right there. You want to see it continue pushing down. Yes. What is ES looking like? ES is giving us a reversal here and here with an order block there. Body trades below it. We come all the way back up inside it here. And then you've got a continuation on the downside. Man, these are just magic here. The body doesn't close above the high. It opens and quickly rips through it. Comes back up inside it. We have a break-in market structure to the downside now. Body breaks below, come back up, find some support. Pushing lower. We're still going lower, good. Still find support. So far, paying out. We're still finding the levels that we're looking for to continue staying on the horse, not getting flipped off the horse. You'll see these changes of directions. We look for the return back into the smaller range that we're in. It was acceptable to run up into a premium. That's a nice little stay open spot here, a little breakaway. We found the support. We found a nice little displacement candle below the lows. Come back up inside the support and continue on the downside. Look for this fair value gap below you to fill and manage this from the back end. NQ, a little more choppy. YAM looks a little more cleaner. YAM. Get your YAMs, your Dow Jones YAMs. Here's we got a reversal here. See that little piece right here? Body trades above it. You don't get a chance to get back into it though. Look for the next one. Imbalance. Body trades above it. You literally open on it here. If it continues to march higher and higher through these little imbalances on the other side, remember you're still only risking whatever percentage you choose to risk. Has to be at the low. So if you choose to get in on the next one and you say, well, if I don't get my return to here and it continues to march higher, do I get the return to this one? If I don't get to return to that one, because I want to see a body break the high and return into it. So if you have a body break the high and return into it, as in this case here, you could get long from here. Again, your stop loss still has to go down here. You don't get anything there. You're dipping into this one here and this one here. Euro was a lot cleaner. You got the high. You don't have a swing here yet, right? Order block. So that's your breaker that takes out this high. You trade below it. Come back into the breaker right here. Perfect entry for a short. It's not a reversal, but it's definitely the break structure. Trade back into it. continue on the downside. If you waited for the fair value gap, wait, let's look at this fair value gap right here. So watch here, as we trade below it right here on the body, you trade back into it right here for a short. If you waited for the order block that initiates the run, or this whole beginning of this thing, if you still sit down, I'm still not sure yet, wait for it to trade below here. It does here, it doesn't give you an opportunity to get on its left down now. If you waited for that one, traded below it, body trades below it here. Nope, you wouldn't have got any other opportunity unless you took the ones up here. Lovely. GBP rejection block. Nope, didn't even hit that. Took the high, order block, mean threshold. Wait for the reversal. Let's look for a silver bullet at oh, we're going into lunch hour now. We see a body get above here now. Close above this. Trade back into it. Stop loss here. Go along for the premium array up here. Inside that range. That's the one I'd be aiming for. Other than the liquidity sitting above you here, but that's where I'd be aiming for. Inside that smaller range. Pull your fib tool. Inside there. 50, 62% if you're going to use that method. Fair value gaps. Whatever method you're going to use to run those. That's the range. That's the reversal. Watch the close. Now watch for this to return into this level on a right there. So watch for it to come back into this area here to continue higher, and then you're aiming for that level right there inside this range. Pull your fib. And now if this continues to climb through it, look for this order block right here to provide a level of support to continue higher. Again, whatever you're risking down here, 1% of your account, 1/4%, whatever your risk tolerance is, it's not for me to say. And then I put this little guy here to there, and then you make those one of these dudes. Keep your eyes on that. And that's your upside objective. At the inner circuiter, if you're still here, I would appreciate your view if you hold significance at the 822 where ES took London low out while MQ left those equal lows in place. 833. Thank you for what you do, Theta. Hey, you're welcome. Michael didn't say anything, so he didn't just go, "You're full of shit," and then leave. At least he was kind enough to hold back his applause or his condemnation. Thank you. Not ready to give up the goods. YM bounced back up. It rebounced 15-minute. Hey, you, this is a warning. Meme stock AMC GME squeeze has come to an end. Game over. It's all over. Short now. Collector. Meme stock AMC GME squeeze has come to an end. Game over. It's all over. Short now. AMC, that's the news thing, isn't it? Found these equal highs here. If we end up hitting this, then you upside objective. What we get that? Then we didn't get it. No big deal. No rush. But we called the upside. We got the reversal. The algorithm says, guess what? I'm going in this direction. I'm not going to give you an opportunity to get on the bus. I'm leaving without you, kid. You're standing at the bus stop with your lunch pail. The bus is left. That's okay. Just keep watching these reversal type moments. Now, pull your fib tool from here to here, and you're already over the 50% mark. Fair value gap is filled. Now somebody was saying, there is a fight on now, NQ. Can we look at NQ while let's look at NQ. Yes. Yes, back in here, hey? Got this fair value up here, body trades above it, comes back inside it, runs for the highs. That makes sense. And then we've got this reversal here, body trades below it, trades back into it. Now we're going short. You're inside this range. So you're really going from short here to long, validating it here to go there. This one here, breaking low here, coming back up inside, go short. You're inside this range now. You're in a consolidation now. Don't even muck around in here. This is a 1 minute consolidation. In that discount range, you're just looking for anything inside here. So pull your fib tool in here, consequent encroachment inside that range right there. There's 62%, which is your consequent encroachment of that range probably. So see how you get a reaction off of that? That's a discount array inside that small little tight little range. This one gave us the run up to the rejection block. Pay yourself at rejection block because you're pissed now because you didn't get your, so I tell you, pay yourself here. If you get that, bonus. Pay yourself there. You get the reversal, body trades below it, trades back up inside it. You get back to a discount array inside the smaller range that you're in. Pay yourself at 50, 62%, pay yourself there and take the rest off. Oh, you didn't get 62, sorry. You got 50, you move to break even, take 50% of your trade off inside that. Now, again, we're imagining this as a hourly chart. Or imagine this as a daily chart. Or imagine this as whatever. If that's the range you're looking at and you want to get in on a trade, you're going to get short. You're going to pay yourself at those levels. If that's a daily set of candles, that's the idea. So all I'm trying to do is just keep you guys in price action and watching where price is going, what it's reaching for, and where could it be reaching for next. And the better we get at analyzing the 1 minute chart, the better you're going to get at looking at and your setups, all those wonderful setups that Michael's given us over the years. You'll feel more confident with your setup once you understand where each candle is headed. Inside these, just stay in chart, stay on the horse right here, in action, see where you think it's going to go. Right now you're bearish inside this range. And if we close above there, this is where you got to see, where does it fail for me? Where does this go wrong, or where does this change direction? Well, if it trades above that on a close, then we're going in the other direction. We're going to go higher. then I look at this as is this the next price leg up? Is this just doing a retracement back into an optimum trade entry to go for another price leg higher? So I want to see that break there in order for that to confirm that that's the idea I'm looking for next, and I'm going bullish. So watch right here. Literally closed on it. See that? Now you want to see it pop up. Keep coming. And that's a 19 candle. So we got these flippy floppy, the squabblers, the squabbling candles. So 21, look for the 21-minute candle. That should be setting the low at 16, 17, 18, 19. They tend to squabble back and forth to who's going to make the high or the low. So 19, see how we opened on it? You want to get above here now. See how we closed above it? Now I'm bullish. You come back into that little fair value gap here and push hard. Man, it's cold here. I think I set my whole, we're just barely getting out of winter here in Canada, and here I am, I'm freezing here. Going to get my coat on. So now I'm bullish. Basically, we closed above that little area, which is what I was calling before it happened. If we close above that, then I'm bullish. So we're going to go bullish. And if we close below this, then I'm bearish. And I'm inside a consolidation, so I'm allowed to say bullish and bearish, but I'm allowed to say bullish and bearish based on where price is right now. And yes, it can change its mind. It can go up and down inside these small little consolidations. We're staying on the horse. So price will jump down, then it will jump back up. We want to know where it's going to go. When does it prove itself in one direction or another? Then the next trick is, how do you get on that? When you see your setup. So watch here. If we close below this on the down close, then you've got that. This is what we've talked about before. We have the premium of the premium and the discount of the premium inside the premium range. You got premium, discount. We're in that consolidated range. We have one. Watch this. Let me just show you here. Just kind of watch how this is setting itself out here. Here's the premium range. Here's the discount range. Here's the premium of the premium and the discount of the premium. Here is a small little fair value gap above, and you have this one below in the premium discount, right? We just ran up into, is that even one there? Little tiny one. The dots are bothering me now. So now we've traded below here. You want to see it come back up into here and continue back down. And what have we got sitting down in here? We've got an area that hasn't really been tapped yet inside this smaller range. So we're reaching for here now. We've got a body trader below that, trade back up. Now I'm looking for it to run down into here. That's 21. So 27, 30, 32. To the premium again, we're above here. You're literally, I think we're closing above that. We may start pushing a little higher. Here's where I can get flipped off because I'm not looking at, let me remove this and see what we're sitting at right there. Yes, we did close above, so we're going higher. Look at this high. Equal highs. So right there it says, hey, I'm going higher. See that? Literally closed there, open, tapped it, and then left. Super tight. Just stretch that out here so you can see it a bit more. See that? There's the fair value gap. Body closes above it right here. Come back, tippy tappy, and off you go. Stay on the horse. We're just trying to stay on price action, see where it's going right now. That's all. Taking rejection block. Come back, find some support. Where will we find some support? Off this these two candles right here. It'd be nice to leave that open. Keep going higher. You're done for the day. When can I give you a call, Lauriston, about the Apex thing? He's probably looking at that minute indicator going, what the hell has he got dots all over that for? That's not what I teach. I'm short NQ, out of the money a little bit. Downside coming. Ooh, it's still bullish, man. I don't see downside yet. Yes, there's lots down there, but you're bullish right now. In order to be bearish, I want to see this get above here, clean these highs out, come back, take this low and this order block on a bold, distinctive candle, come back, find some support at that. And then, yes, I'd be in with you, Craig, on a low on that one. But I want to see these highs get taken out here first. Go high to go low. And you want to see this hold price, or it's got a body whip through here and this candle on a close, then come back into it. Then I'd be like, okay, now we're into this range again, and you got this discount portion, a larger range, because we're still inside this range even with that candle. So clean these out, come back, then take that, then I'd short with you, then I'd be out in there with you, Craig. What was your confirmation to short NQ? Just curious. My confirmation to short NQ was right here. Even though I like to see a high get taken out first before we do the short. But that little spot right here, body trades below it, short right here, back into, and I'm just shorting back into a range that I'm in. There's 52, there's a 50%. We just hit under, almost short of 62 on that range there. So you pay yourself there, and if you're wrong and it goes back against you, at least you're nibbling out of these little tiny ranges using that fib tool entry I showed you. Take half your trade off, move to break even. If it comes back and takes you out, which it did right here, then it closed above that little fair value gap. Then I'm saying, okay, now you're long. It dropped all the way down, closed below you. Okay, now I'm short. It took that low. Then it went above. You go, great. Now I want to see it stay above here. It stays above, comes back, finds support, and continues pushing higher. So you got to be prepared to change your mind up. And if you're in these things and you want to go short and stuff, if you're aiming for way down here, you overshot your PD arrays, just turned on you and went back. That's not what price was showing you. Price was not showing you down here. It was just saying, hey, look, this is a small range I've been staying in for a while here now. What makes you think I'm going to bust out of here yet? I haven't taken any liquidity above the market yet with any significance. Like a big whip up there, clear that out, and a distinctive displacement candle back down. That hasn't showed you any of that stuff yet. So now there's a pop above. That's nice. So we're still going long. We're not short yet. I guess I'm not. Might be a breakaway gap, 4-hour fair value gap on there. Yeah, If you're trading a 4-hour chart, trade on a 4 hours. Look for your candles to work on a 4 hours, and look for where does this fail. If this was a 4-hour chart, where does it fail for me? You have to wait 8 hours for it to get back into a range. So here, broke above, you have to wait all this time, like till the next day before it finally came back in here to go long, right? And into a discount array that you're expecting inside that range. You want that to provide support for it to come back into this range with a 50% or more, and then a continuation. So you're looking at 1, 2, 3, 4, 5, 6, 7, 8, 9. You've got 10 4-hour candles before it finally gives you something that really gives you some meat off of this reversal. So when you're looking at here, don't judge a 1-minute candle by a 4-hour setup. Your 4-hour setup, if it's coming, the 1 minute will be showing you when we get there. And then when you finally hit it and you see that point where you go, if it hits there, I'm taking that long on a 4-hour chart, and you go long on that. This chart here, the next 4 hours, it gave you a big sweep down, and you go, well, my stop loss is way down here. I got to weather all that weathering down. Then all of a sudden you're like, okay, 4 hours later, 4 hours, you're sleeping through the night. It comes back into the morning. We're just trying to stay on the horse right now. Stay on the horse. Craig, down right now. I'm on a pain train. Yes, you are, my friend. You're on a pain train. There's nothing in here that says that's going lower right now, on a 1-minute chart anyway. Now you might be reaching for a higher time frame objective on your 5-minute, 15-minute, whatever you guys are looking at. I got no problem with that. But our higher time frame objectives, these equal highs sitting up here, they're the target for the overall run for the day. We're running for here, then for that one, these equal highs, 50% of that wick, and then that high right there. And we're literally just catching reversals, and we're seeing when the price changes direction on us. We're catching their change in direction and the continuation, and just staying on the horse, riding it up. That breakaway gap stayed there nicely. Continues to the upside. Hot choo choo. LOL, grab your suitcase. LOL. Let's go. 18,611. You want these to provide support for you now to continue climbing higher. And always look at the range that you're in, those little tiny swing points. When candles get validated, what's been hit, what's not been hit, where's the fair value gaps, block them out on your chart. Say, where does that sit in my range? So if I'm sitting in here and I'm drawing my little fibby tool here for my little fair value gaps. And I'm pulling my range from here to here. I go where it's sitting in the middle. Well, that's 50% right there. Like if that was our small little range we're looking at. Look at that. 50%. Just dip down above that, below that 50% into a nice little juicy piece of Bissy here. And off you go. If it keeps extending, oops, if it keeps extending, watch right here, 50%, 62%, or 50% here, 62% will come back, fill that. 70% will bring us right back to this old high. This old high here. If it extends, just keep extending it and see where that lines up. Then it looks like it could be a discount rate. Like if it ends up going like this, you go, okay, well, there's a 62%. Let's put that right on 62%. We'll put this on 62%, the bottom half of it, right there. I'm just fucking around with you guys right now. It's still going higher, but reverse engineer it. Have a look at where it's sitting. Each candle that goes up saying, oh, what's that looking like now? That's looking like 62% retracement. That's definitely in a discount array right now. We got an order block here that's above 50%. Very nice price distribution, reaching for daily highs, 4-hour daily fair value gap, or best for me. YM never really moved. Will it reach new ATI all-time highs today? It's annoying because on the US 100, on the trading view, it's already above the highs, 90%. So for longs, you would really only trade between arrays to be safe. If you're trading in these little consolidated markets, then Russell, yeah, if you want to be safe and you want to pay yourself consistently and quickly, then you'd pay yourself inside that small range. Like if it reverses and comes back into a smaller range, you want to pay yourself at 50%, 62%. If you're playing inside super snipe ranges, like I just want to catch every little reversal that I can for optimum trade entry, then you're trying to catch every super sniper. If you're trying to buck the trend and the overall, obviously the drive is higher for these equal highs, we're looking for those, and they've just been taken out now, or no, not yet. If you're driving for these highs, then, and you're counter trending that, you're looking to get your ass handed to you. Because if you're not staying on price action accurately enough, and the trend is continuing higher, why do you constantly keep trying to arm wrestle it? It's like Michael says, why wrestle something that is clearly showing you an upward trajectory? Find an opportunity to get in on that, to continue up in that direction. And if you catch these wrong, sometimes when we catch them wrong, you still catch it right if you pay yourself at the right time. If you try to catch this as the reversal for the whole day, then you've got your ass handed to you, because we're late in the day already. We're in lunch hour still. And the high of the day, we'll be looking for afternoon. This would be nice to see the highs that get set here. Then look for the 1 o'clock, 2 o'clock reversal. Then look for something distinctive, like a nice sharp reversal occurring at a time of day that I can expect these highs to get taken. And we're looking at lunch. We're coming out of lunch hour here now, on the bottom half of lunch hour. Look for your swing point to occur up here. So don't try to wrestle it all the time down in here in a lunch hour. Doesn't make sense. Doesn't make sense at all. And if you do catch the high and you see a distinctive low and you catch it, you move to break even, then wait. Just sit on the sidelines and wait and let your trade pan out for the rest of the day. If you've caught the late afternoon reversal and you can move to break even, then don't worry about trading inside this little range. Just let it buck. Let us see how much we can get back to perhaps this old daily fair value gap tomorrow. If we can touch this old high here again and continue higher, great. Yeah, it's hard to go long now. You'd be crazy to go long now, Craig. It's really late in the day. I'm out for gym time. Have a good one. Tomorrow we'll cross the previous month's high and reverse, hopefully. Yep, that's for sure. Why I'm reversing nice for long. Trade that. That's if that's the reversal you were looking at, or this reversal you were looking at, then yeah, that's a long back up into a range. It's a longer range here. Premium array. Stop loss, pull your fib tool, 50%, 62%, whatever you want. It's late in the day. Protect your money, man. Protect your money. As soon as you hit these highs, pay yourself, pay yourself. Because you're trying to squeeze all the juice out of the orange for the day. And if you are, protect yourself. Protect your prop. If you're in, man, that's my advice to you, is protect your money. Because if this comes whipping it back against you, you'll kick yourself for not paying yourself sooner. And it's better to leave with 20 bucks in your pocket, or not even to be inside this kind of environment in the first place. Just kind of watch and wait now for a nice clean afternoon PM session. Would you do pyramiding on this kind of price movement? From this morning, had you caught that 10 o'clock run, like that 10 p.m. silver bullet that we saw down here, this 10:02 silver bullet, you would have caught yourself here. And then the moment you get, you'd be in on that. And then the next one would have been for me to pyramid. Michael probably would have pyramided here and here. But for me, it would have been something like this right here. If you break that there, you get on it there, you can load in another one there to continue going along. So you enter in here. You see this fair value gap break to the upside. Load on another one here. Breaks to the upside. If you can't load one on there, load one at the top of that. And that would have been right there. And then you wait and you leave the rest. That's easy for me to say now because I can see what mess you went through. But when you start getting into this consolidation stuff, that stuff makes me nervous, especially late, right when you're coming into lunch hour. You got all that consolidation and stuff. Runs out lunch's highs and runs back down below in the 1 p.m. afternoon session. Takes out lunch's highs or the morning's lows. Well, morning's lows way down there, so taking out lunchtime highs. Now look for a nice clean reversal, not something choppy. You want to see a big bold candle like that come back down and a nice distinctive break through it and take this candle out to get into it. That's what I want to see up there. Anything above that high, these highs, if that high doesn't get taken right now and this reverses back into here, if it just stops right up on here and holds and then comes back into here before taking that out, I'd love to see that. I'd love to see that happen. That everybody's aiming for these highs and you don't get them. It just stops flat on top of them. And you got all that liquidity sitting there. Retail would look at that as the ceiling, the reversal, and then it comes back and takes them out later. So wait till you see a nice little break. Where is this guy sitting in terms of the discount array now? Order block, mean threshold. Look at that. React off of it. Look for this run back up into here, or 50% of the wick, which it just did here. Continue running back down into this, through this guy here. If we break through that, find some support at that, I start getting curious now. Ideally, I want to see this low get taken out with a bold candle, not just a wick. I want to see a bold candle get through here and use this to go lower. Taking out a low, fair value gap, return to a breaker. This is a breaker here. That run up breaks this low here. Equal lows. I want to see it come back into here. Leave this open though. Half of it would be open, would be nice. Just come back to the consequent encroachment of that little sibby here, and then roll over and come back down. Because it pulls out of it, we traded, it started to consolidate. I got on the break of the consolidation. It's Pierce been in a while. Diamond hands, bro. No joke. Pierce faked me out. Sorry. The recent low that broke the consolidation. That's what got me. It's a good dip this afternoon. I see. Thanks. So think now it's a small pullback and we'll go higher. Yeah, it could be. That's why I want to see, like I say, I want to see a distinctive break in market structure. I want to see this break here, and I want to see a bold candle, not just wicks, and not this just slow little meandering thing down here, because I'm not interested in that. I'm interested in a big displacement candle that says, okay, we're done up here for now. I'll come back and revisit that later. But you want to see a break in structure. Ideally, you'd like to see this lower end break structure down here with bold candle coming back up into a support area, whatever we find that is created in here to continue down. But this slow little, you want to try and catch every little tiny turn this late in the day near those equal highs. Unless it's clean and distinctive, I'm not interested. See this low taken? You see this reversal here? Watch right here. Watch this piece right here. You were just saying this, Craig, right here. You're saying, could this be just one of those little tiny fake me out things? So watch, if we close above this, then we're going higher. So that's one of those little tiny reversals. There's nothing over here that says I've got a reversal happening. So I still look at this as a support. Like I was talking about with Jessica, was saying, how would you pyramid that? You're looking for that to break to the upside to continue going. This is the same thing we're looking for right here. You want to see that break to the upside to continue going. So at least you're looking for that, Craig, which is good. Yep. Maybe turtle soup in the PM session. It's a good eye, Craig. At least you're looking for that. Now this is what you're looking for. See how it reversed? Now it says I'm going higher. Find some support off of here and keep pushing higher. If we close below it, then you start to go, all right, we've got this little fair value gap here. If we close below that, come back, find support at that. I want to see this get broken to the downside for now a downside run into a smaller premium discount range here. Right now we're finding support off of that, so we're still bullish. $32 likes today. 32 people like what we were doing today. I like it. It's good. We got a 767 going on here for subscribers. That's a big Boeing airplane right there, man. We got a boatload, a big plane load of people. 767. And higher we go. You see how price just says, hey, look, guess what? I'm going back. I'm going to give you an idea. If you see me break this, I'm going higher. Give you one opportunity to catch me. And off we go. Take that high. Pay yourself. No, Are you paying yourself in a small little range like that? Hell no. But if this was a daily candle, that's what I want to point out to you guys. If this is a freaking daily candle and you saw that and it came back there, you'd be like, I'm loading that boat and I'm looking for that 1 minute chart at 10 o'clock in the morning or a time of day that gives me this as a perfect entry point. I'm looking for that 1 minute chart to give me a little entry right off of here. And you just caught that high and you paid yourself for an entire 2 days run up into here. This is no different than a daily chart. That's why we practice on a 1 minute chart. Because you start to see that shit and you start to go, oh, now that's my objective. I'm done. I'm taking these 2 equal highs. I'm out. I'm out. Practice it on a 1 minute chart. Pay yourself right away. Because these are the objectives you'd be aiming for if that was a daily chart. Watch this here now. And think about the range that you're in. We've got the discount one here. We've got an equilibrium one here. And we got a premium one right here. Find support off the order block. Hell no, it says I'm going up. I'm going north still. Still bullish. $48, $50, $52. Order block validated. What's the high of this candle here? 626. 626 right here. Just above us is that last candle's high. These equal highs here. 626. Anything higher than that, and that's all cleared out. What's the 50% of that wick right there? Let's stretch this out. And take 50% of that wick. Oops. Equilibrium. 18,644. 18,644. Going higher. Just changed to 15-minute quickly, he says. I want to see this. Let's have a look at the 15-minute chart here. Where do we see this stuff happening on a 15-minute chart? Here's your 15-minute reversal from here to here. There's a little tiny piece in here. No, it's not. There isn't one there. We've got one here. No, I don't see anything in here. I don't even see a CAM model entry here. I got nothing on a 15-minute chart. I wouldn't even been able to enter into my 15-minute chart here today. Yeah, I couldn't have even touched this chart. There would have been no entries for me on a 15-minute chart here, other than if you would have pulled back for a 50% optimum trade entry. I would have had nothing there. See, sometimes you can't even catch your entry on a 15-minute chart, that you would have caught multiple entries staying on the horse here in the 1-minute chart. On a 5-minute chart, let's have a look at a 5-minute chart and see if we would have found an entry on a 5-minute today. There's a reversal right here. Body trades above it right there. You trade back into it here. You go long. You're aiming for order block, rejection block, old highs. You got all of those. And if it comes all the way back in again, you get another opportunity to load that whole trade on all over again. Or you wait for a reversal. Here's your reversal. Body trades below it. You come back. I don't think you get an opportunity. Oh yeah, you do right here. You get an opportunity to get on it. Like array to like array. Watch. Like array, you hit it. Come all the way down into discount. Boom, right into that array one more time. Bodies, wicks come down here, scare the crap out of you. Almost take you out. Comes back up. You still close above that candle there. And then you catch the Tesla rocket. Not that you would have traded that, but I'm just saying you went from discount to premium, made money on that. You came back from premium to discount, made money on that. And then you loaded on your trade again and kaboom. You've been running both sides of that without emotion. I clearly understand there's emotion, there's news, there's all that stuff involved in that, but just straight ones and zeros with zero emotion, just trading what you see and nothing more, then that's what was there. And that's not hindsight. I'm not just hindsighting that just for the sake of trying to find it something that fits. That's the reversals that we've talked about when they set up and everything. So I didn't give you anything there that wasn't true, that wouldn't have been true had we been in it on a 5-minute chart. See how that right there told us we were still going higher? Still going higher. Still in the horse, still on the horse, galloping away now. 26 is taken. That high's been taken on the daily. Now you're looking for 18,644 for the upside. Well, in 7 minutes. Done for the day. See you guys tomorrow. See you later, Jesse. Sorry, there's a big delay you seeing my message, so there's no confusion. So there's some confusion. Sorry, Craig. I was talking about the last candle. So you think today will break new highs on NQ? Don't know. I'm not reaching for that right now. I'm reaching for this next PD array. This is the only one I'm reaching for. And if we close above that, if we continue to go higher, then I'm reaching for that. I don't try to overreach PD arrays. I just try to say, what's the next one above me that I could be hopefully still in? And if you're still in that race for the highs, that you say, okay, I'm looking for that. If I see a snappy reversal, then my guess is we've taken those highs out, and now we're going to hold off on the 50% run. If we trade through that, then we're going higher. We're looking for the new high. Whether it makes it today or not, irrelevant for me right now. That's my next one, 18,644. up here. Keep your eyeballs on that. Jimmy's aiming to 18,650. 75% monthly wick. Ooh, interesting. Interesting. That's a nice little reversal right there. Body gets above it, come all the way back inside it here. Silver bullet entry at 12:10. 12:16 pops into it. 16 is the low candle. 16, 17, 18, remember? Reversal back into that silver bullet entry for a long. It's in a discount inside that small range there, I bet. I bet you that's 50% of that range or more. Yep. At a time, 16 candle. Price, inside, time, silver bullet like Michael talks about. For a higher run above. You're in a consolidation here, so it's wishful thinking you're going to take that high out while you're just beating out at a consolidation at 12 o'clock in lunch hour. But algorithmically, yep, it hit 60%. That's probably 62% or 70% there. Just shy of 62. Oh yeah, we were talking about that. Just shy of 62%. Came back 50 left. You have to see it enough times to trust it. Took a long at 18,600. Oh, you did take the long here? Nice, right here. I can see where you took it. Right there off of that order block. Nice. Broke that high with a body, come back into it. Well done. Well done, David. Need to have confidence to stay in the trade. I'm getting it. Take your time, man. No rush. No rush. You know, like Michael says, if you get 10 handles, 5 handles, 10 handles, then you're aiming for 20 and 30 and more as you go. And you're either looking for PD arrays or you're looking for handles. I prefer if you just reach for the next PD array, look for what it is it's aiming for, what range are you in, what looks logical for you to reach for up there. And then just start reaching for that next one. And always protect yourself. Protect your principle, man. Protect your principle. Your first thing is get your trade on, see where it fails for you. And if you get confirmation that it's still going in your direction, protect yourself. Take your principle. If you know, where's my next fail point? If it fails on me coming back the other way, I'm wrong. I'm going to break even. If it turns against me, I'm going to at least break even and start this trade, a different trade, when I see a cleaner setup or I see another setup. But always protect your principle as quick as you can. And that the only way you can do that is confirm if this breaks at a certain spot, I'm wrong. If I go down below that, I'm wrong. I'm going to take my stop loss out. So if I'd entered in right there, my stop loss was sitting here and it broke above it, I'd be like, sweet. Now I'm putting my stop loss right there at break even because it should not break this low. If it breaks the low, then it's coming back down. I'm on the wrong side of this and I'm out. Protect your, and that's again, recognizing where it fails for you, not just randomly slapping your stop loss up anywhere. It's about recognizing if it fails here, it's coming back into a range, into a deeper discount to go long again. And I don't want to be in that. If that happens, I'm going to be out and I'll wait for the new setup to go long again and get in on that. I don't know if that makes sense to you guys, but good trade there, David. Do you have an objective you're aiming for? Are you managing it from the back end? Are you looking at the front end management of this? So do you just have an upside objective and say, if it hits it, great. My stop loss is sitting down here. So if it suddenly whips back against you, you're okay with that? You managing it from the back end on the way up? Do you have a trailing stop loss? Like what's your, spit it out, man. Share with me. What are you doing? What are you doing to manage your back end? There's so many different ways to manage your trade, one side or another. I got a couple more minutes and then I just want to see it hit that objective. And then I'm going to call her quits for today. My objective was a previous high at 612. Oh, so you're out already. Oh, okay. So you're just aiming for at 600. You're aiming for this next. Nothing wrong with that, buddy. Nothing wrong with that trade. Don't beat yourself up on that. If that was a daily candle, you'd be killing it. People would be high-fiving you. I think I see what Michael's talking about here. Hey, 1 o'clock, 107. Make that high, man. Otherwise, we got to wait for the squabblers to sort it out for us. Come on, 7. Ram it up there. Give me a big bold candle, 7. Let's go. Drive it up. 10 seconds. Let's go. There you go. Ram it up there, number 7. Put a little wick on the top. We're looking for 10. The squabblers to sort it out. Now, when you see a wick up like this and a wick down, Michael was talking about treating this like a fair value gap. This becomes curious for me. Don't marry this. If we get it, great. If you don't, you came close. I haven't traded below this yet. Still keep going higher. And this is just an area of curiosity for me right now. Not that it's there you go. Now you got it. See how it hit it and you bounced off of it. Now we're going to drive right through it. It's an area of curiosity. See how it just hit it? And then we get a reaction off of it. It just stops there. Now, if it just pounds through it, that's fine. I just love the idea that it found sensitivity right at that 50% mark. Nothing else, just kind of stopped, stuck there for a second. Now we're having a bit of a reaction off it. So I want to see it get below here. Still finding support here. Still going to go higher. Was it 110? Now we're looking for, so that's the end of the macro. 1250 to 110. Eric, where's the carrot? Wow, the carrot's like, it's eaten through the carrot. It feasted on the carrot this morning, I think. It devoured the carrot way back here somewhere. I don't even know where I even had the carrot. Was it from yesterday? I might have taken it off. What a huge run. What a nice little run for the day. Now, this is the part that I love to see. There's the reversal. Body trades above it. Lammo. Right on it. And then literally kaboom. It opened right up on it and left. If you would have literally caught that reversal this morning, you would have caught perfect entry with a 1.5 handle drawdown. And if that's your, you end up having an objective up here, it's nice to fantasize, hey? And you're still going. Now, upside objective. So we're looking here, look for 75% now. Or just a big ass wick coming up here and then slam down. We've got no real displacement though. We're still going bullish. You're still going long. So aim for 75% now and then that old high. So 75% puts us right in quarter 18,677. 18,677. That's the next side, upside objective. What a monster candle. Oh, it is so lovely. Think about that when it comes back the other way. I love seeing that kind of candle. You look for these old highs here, these areas here, as objectives to aim for on the way back down. Oh, fair value gap, pop up above these highs and start a run back down. Can you imagine getting one of these candles all the way up, all the way back down again off this high? You catch that nice little reversal. Oh, delish. Don't even be upset that you missed this run. You would have caught a really, really nice run at that 10:02 silver bullet today. Where's the carrot? I'll give Erica the carrot here. She likes the carrot. We'll put the carrot up here. I'll give her a little motivation. The algorithm's been working hard all day. It needs a little sustenance. Gotta motivate that thing. Dixie breaking lower. So where then trend line traders eating good tonight? They're all just like, those guys don't know what they're talking about. Trend lines rule. Now, this would be slammer down now. Come on. Don't even bother going up there. Just give it a little wick above 50% and slam the sucker right down through here. You want to see an intention candle, a displacement. There's our little swingy. Sit in there. Don't give me anything else out there. Just give me this. That's it. 25%. Stay there and come back down. I don't even want to see 50% return to this wick. I just want to see that stay right there at 25. It's the carrot. It's motivating. The carrot's motivating. No, it's still going. It's still going. It ain't coming back yet. Okay, I think that's going to be it for me. When I leave, as soon as I leave now, it'll start to move. I am going to go and I tried to short earlier, not an official entry, just the beginning of the consolidation. I thought it was resisting to go up. Now I'm waiting for that reversal. We're due for some sort of reversal. Here, that's a nice dig. That's what the kind of candle we're looking for, my friends. I like to see a big, just give me a, come on down. I'm going to go a little short right there. If it trades above here again on a close, I'll close it out because I'm wrong. So I'm looking for a short here now. That's a clean for me. It looks pretty clean at a time of day that I expect a reversal to happen. So if it closes above that, I'm out. You look for an opportunity to get out at break even. Now that's it. I don't want to see that revisit that again now. You can come back up into the order block here as a wick. And then manage it whatever way you see fit, whether you're doing your fib tool or your ideally you want to see it break below, stay below this. You want to see that wick up into here. That's good. Did that close above? I think it did. Now I'm not going to give it any more opportunity to come into there. I'll give you the rejection block or the mean threshold of that order block. That's it. I'm not sure if that's closed above. What's that candle's low? That candle's low is 6465. And this one is 6475. Oh, 6465. That candle's close is 6465, so it's right on it. Now I don't want to see it revisit that. I'll take a $45 loss. I don't want to see it come up here again. Get out of Dodge. Get out of Dodge, my friend. Get out of Dodge. So I'm trading what I want, not what you know, the algorithm. I don't like all this floppy, sloppy crap here. Get out of Dodge. Or get me out of my trade. Logical level. If it fails there, if you've revisited it twice, there's no reason for it to go up there a third time. That's why I'm moving my stop loss there. I'm not racing prematurely. That's my fail safe now. I don't want it to go above that. Otherwise I'm wrong. I don't want to get into this consolidation game. I want a clean reversal here. And if I don't get it, then I'll move to the sidelines and wait for something more later. But that's my idea. That's my trade. I'm out of here. So I will see you guys. What's my downside price target? Use your fib tool. I'll use my fib tool for this. Dirt. 50%. Pay yourself at 50%. In this case, I've only got one lot on, so I'll just drag my stop loss to break even. If it takes this low out here, I'll move to break even anyway. Like that. So now it's come to zero stress trade. I may just come back. We haven't tapped that low, so I should really leave that just on the top side of that there. 25 bucks loss. No, you should. It can right there. I don't want to see it get above it. It can come back up, tap that, and start driving back down again. I don't want to see. Ideally, I want to see us get below this candle here, a body. I'll get more excited about it if a body drops below here. You see a nice down candle, start really pushing here, get below here, then 50, 62%, the same thing that I showed you before. I'll just pull that and chase it down with the back end. If it turns around and comes back up on me, I've caught the outcome trade entry on the way down. I want to see this get going now. Moving right there. I'm going to go 10 bucks. Zero stress does whatever the hell it wants now. anyway, you get the idea what I'm looking for. You saw the reversal. I'm taking the reversal. I'm trusting the reversal, and I'm putting the carrot down here. That's my objective. I hopped in with you on that one. Let's see if it pays. Put yourself at break even anyway, Erica. So if it does turn against you, at least you make the cost of your trade back. I don't have a downside objective. I will literally take this stop loss here and I'll drag it down. As soon as I hit 50, you could take half of it off, but I can't because I've only got one lot on here. So I literally have to manage it from the back end. So as soon as it hits 50, you're at break even. 60, move it up to 50, then 60, then so on and so forth. So Erica, enjoy your bit of fancy cash now. So the price target, there is no price target. I come to here now, make a little bit of cash. So that order block there, you want to see that hold price now? I don't want to see it rip all the way through here. Come on down. Anyway, I'm out of here. Thanks very much for tuning in, you guys. I appreciate it. If you like what we did today, just hit the like button. It lets me know that you guys appreciate what we do. And if you're a new subscriber, welcome to our channel. We do have a Telegram that we meet on after this, after hours. Erica and I will be talking about this trade, I'm sure. And look to protect your principal. And anyway, so you can meet us on there on Telegram, and we can have a little chat about what you like, what you don't like. If this stuff works for you, then great. If it doesn't, then thanks for popping in, and I wish you all the best of luck. And if not, I will see you tomorrow, bright and early. Erica, see you on Telegram there. Later on this afternoon, I'm going to go for a walk, and we'll see how this trade pans out. All right. So thanks again for tuning in, and my name's Darren. And it's been fun being with you guys today. Thanks a lot for tuning in.